Yo, what up, everybody? Let's go. We have a great session here for you today with Chief Market Strategist Matt Maley, lead trader from the Benzinga Stock Picks Inner Circle chat room. You don't want to miss the session we have for you today. We're going to be starting in 20 minutes. Why? Because Matt Maley is in the chat room, in the live trading room right now with all the members going at it. So it was a pretty intense day, I'll tell you that. We're going to tell you all about it and how we've been profiting in this market. We're going to show you the trades, the strategies, and also what's happening, right? But not just that, how to make money out of the volatility that's going on around in the world. So just make sure you're here when we start, 5 p.m. Eastern on the dot with Matt Maley. You don't want to miss the session. Trust me on that. All right. We'll see you here in a few. All right, what up, everybody? How are we doing? Welcome to the session here. My name's Rodrigo. Today we have something pretty special packed for you today, and a couple shout outs here to some folks. Bryce, Cisco Kid, what up? Suvi C. Wilkins, good to see you. Ricky P. Norden, WK Cheryl. All right. Okay. So, guys, we're going to go over a couple topics today: trade ideas, education, options, what's happening in the markets, and more importantly, how can you make money out of all this stuff? If you do want to take it to the next level, you can always join the live trading room with Matt. That's where he was. But now I believe we do have him here in the chat. I need you guys to tell me when we are good to go. We had a timer and everything just so that everybody can get settled down. But okay, all right. So I think we're good to go. Sound seems good. Let's go ahead and bring on Matt Maley, Chief Market Strategist from the Stock Picks Inner Circle chat room.
What's going on, Rodrigo? How are you?
Hey man, how was everything there in the chat room today?
It was a very, very interesting day, and it's going to be a great great way to show you how we have made some real good plays here. Now this one is more neutral right now, but I guess my point is we can show you how I went about telling people what I think would happen today and why the market looked really, really good in the morning and why I was hesitant to get too negative. I'm sorry, to get too positive too early and not doing that, which I think a lot of people wanted to do, has benefited. I think sets us up really, really well for tomorrow. We had some bearish bets on that we put on Friday. They looked like they were going to just get creamed today. They basically finished the day unchanged, and we added to them and set up for what could be a rough day in the market tomorrow. So we'll see what happens then. But if that is indeed what we get, which I think is high probability right now. But again, excuse me, the process we kind of look at, that I kind of look at, that whether it be we're looking at fundamental, broad fundamental outlook, but then looking at technicals, looking at sentiment, looking at positioning, all these different areas of the marketplace that are so important to active trading to really determine what we should do on a shorter term basis. I think some people really get too caught up in the fundamental outlook when they're trying to make short-term trades, and that's a big mistake. It's like the market. They say the market is always right, and that is the worst old saying on Wall Street. The market is only always right eventually. Okay, the fundamentals always bear out in the end. Short-term, the markets can go well off and sometimes it's look at Apple Computer last year. It had an unbelievable year, and yet it had three pullbacks of anywhere from 8 to 16%. Even though it had a great year, and if you held onto it and bought it and hold it and just held it the whole year, you had a great year. But if you bought when you saw that it got overbought and you bought some puts on it and still held onto the stock, you made some nice money on the three corrections. Those are the types of things that we try to capture in a normal market. In today's volatile market, you can capture even much more, where you get a lot of big moves, where you make several 100% in options trades in just a few days, and in some cases in just a few hours. And it really, really helps us, more than just survive, or more than just weather this storm that we're going through this year in the stock market. We're actually profiting from it.
Yeah, and there's a lot that's been happening in the chat room. I mean, you set a new record out. Well, you had the record prior in Benzinga for the biggest percentage trade. It was Viacom, somewhere around 5,000%, some number like that, 2,000%. And then more recently, you had it was FXI, which is 8,000%, and some people even made it to 14. So you definitely have a strategy. You've been trading for 40 years. For those of you guys that don't know, Matt's been, he's a chief market strategist, been director of trading at Merrill Lynch, Solomon Brothers. I mean, 40 years, 15 years as an analyst. I mean, Matt, you've definitely been around. I mean, around the block. You're always on CNBC and Bloomberg, right? We always see you there.
Right. For those who are up early tomorrow morning, or if you're in Europe, I'll be on CNBC Europe tomorrow morning at 5 a.m. New York or Boston time, Eastern time. And I'll be on Bloomberg TV. I think it's 2 o'clock on Thursday. So we'll be out there a couple times this week as well.
Right. And for those of you guys that don't know, Matt has a meeting every Tuesday with the chat members. I believe it's 45 minutes, an hour around there, Matt. And
Yeah,
you
we
cover.
started off wanting to do this like a half an hour, 20 minutes to half an hour type of chat room, just kind of like this, only shorter and more abbreviated, and just talking about a couple of different things. But it's kind of morphed into a longer talk. I don't want to go too long because people just get bored and then they have things to do and they want to watch the market and make something. I mean, we are watching the market as we go through the Zoom call, obviously, because the market is open. Yeah, it's kind of morphed into a little bit longer one, which I think people have really appreciated. We get a little bit more educational. In fact, tomorrow, one of the things, I got an interesting question today on, and it's fairly basic, but I say it's easy. It's not an easy answer. It's just something, if you're not used to it, if you don't know it, if you've not been put in front of this stuff, there's no reason for you to know it. So I'm not the person who asked it. It was just a smart question to ask, because as we say all the time, I say, and everybody says in our chat room, there's no such thing as a dumb question. But one of the questions today was on head and shoulders patterns, and what would it mean if it broke a certain level, which is the neckline. So tomorrow I'm going to take a few minutes to talk about that. Just talk about what head and shoulders patterns are very easy to see, and you might imagine as a shoulder, a bigger head, and then a short shoulder. There's a neckline, etc. And we'll bring those up. But the point is, but why? I mean, just because.
Education, yeah.
Well, why it matters and why it's helpful, and why, if it doesn't work, failed head and shoulders negative head. If you break a neckline of a head and shoulders pattern, it's very bearish. But if you bounce off of it, in other words, you have a failed head and shoulders pattern, it can be very, very bullish, very bullish. So whenever you touch that neckline, it tends to be a critical time for a stock or a market, whatever happens to be that you're looking at the time. But again, so we talk about those things. We talk about specific trades. We talk about what we're looking at the market. I talk about the macro stuff. And then people ask questions, all sorts of questions on a variety of different areas, including individual names. And it's kind of but just more where I can have my, my Bloomberg up, my charts up, and right at the time and give, up to the second answers to what we're seeing in any particular asset, including individual stocks, which is what we spend most of the time doing.
Right. And just for you guys to know, pretty much Matt Maley, we trade options, calls, puts, and I mean, it's pretty much every day, Monday to Friday, 9 to 5. So Matt, I don't know if you want to go ahead and share your screen. I know that we've been talking about this this company was Mullen Technologies, the battery company. So it looks like they were.
Can you see my machine? Am I not being shared?
No, not yet. Not yet there.
I don't see my, hold on a second. Okay. Where, I don't know where I'm on your thing, because
I don't think it's sharing right now.
Well, I don't know how to share it because I hit share and I don't see anything else that tells me. I'm sorry to say. I don't see any other button that tells me how to share, so.
Somewhere in the bottom, maybe, or.
Yeah.
I mean, because I'm sharing the screen right now.
Okay, I don't know what to tell you. There's nothing on here that tells me how to share. There's the usual button is just not there. So I'm going to log off and come back on or something.
Yeah, I mean, if that's what we have to do.
Okay, that's what I'll do. Okay, let's see here.
Yeah, it's set for all the panelists to share. So, yeah, I think this happened last time too. I think.
Well, no, that was a different thing because I had to switch machines.
So if I click stop share, I think that's going to stop sharing to YouTube. That's.
Yeah, but I don't have the usual. I don't have the usual screen that tells me what I can do. I don't know.
All right. What about now?
I'll have to log everything off and log out everything back on. I guess.
Does it nothing now? Because I stopped sharing.
There we go. There it is. Okay, now I have it. There we go.
So yeah, we have a pretty big crowd here for Mullen, it seems. But anyways, you and I've been talking about the stock 3 months in the past when it was like $1 and the first thing came out. Well, they were added to the Russell 2000 and the Russell 3000 overnight. So that's a recent thing that happened there with the company. But I know that you've been covering it well. And look, this is just an example for you guys in the chat room to see that even though we're trading options and all that sort of stuff, right? You know, like for all sorts of types of companies, we're also trading stocks as well, right? And sometimes even swinging them. But Matt's been covering this with us since I think it was late February when we first started talking about it.
Right. The stock was down below $1, and this was down in here. The stock down below $1, and it was March, and then it broke out. And you can see when you go from went up 4 times, so you got 400% just on the stock. You don't have to be a genius to know that the options went up a lot more than that. So we really pushed that one. Again, it was as we kind of again you combine these fundamental stories with obviously what was going on in the EV market. It was kind of a meme. We had this meme stocks, a resurgence of the meme craze back here in the fourth quarter of last year. But it came back a resurgence. But then I used this as a higher high. You see how this we got up to $1. I'm sorry, it got up to, did I say 4 times? But it got up to $2. I'm sorry, my apologies. And when it broke above that, I knew that it was breaking out here. And so on a technical basis, it really worked out for us. And the other thing I'll show you here is that we looked at another thing called the MACD chart, which is kind of like the Golden Cross and a Golden Cross and see how here it made a positive MACD cross a couple of weeks before that. So I knew that this breakout to a higher high would take it a lot higher, and it worked out really well. So we talk a lot about different aspects of the marketplace, whether it be we trade a lot in the right now we're trading a lot in the index ETFs because they're so volatile. But number one, number two, they're also so liquid, so you can trade them without any problems. And number three, they have these leveraged ETFs that are built into them. They don't just have, if you want to go out and buy Apple Computer or put or call an Apple Computer, that's great. But if you can want to buy, and it moves 4 or 5% in one day, that's great, because the options really move in a big way. But if you want to buy the QQQ, which is of course because it's the tech, that's the ETF for the NASDAQ 100. That ETF is so that thing can also move 4 or 5% in one day. But that if you buy the options on the leveraged ETF, whether it be the TQQQ, which is the 3 times bullish ETF, or the SQQQ, which is S is kind of for short, that's the bearish leveraged ETF. So instead of making a 5% move, the SQQQ is making a 15% move. Well, let's make it a 15% move. Just think how much more its options are moving. So these things have worked out really, really well. We've made several calls that have been well into the 100%, and some even into the thousands. But the thousands tend to be more on individual names, but we still can make a really good moves on these ETFs. And so we're looking at all these different things, whether it be, like I said, individual plays based on long-term fundamentals, but looking at the technical analysis like we did on Mullen. I say Mullen, not Mulan, Mullen, and then also look at some of the strategies here, whether we get this one there was a short interest built up, etc. So we're looking at a lot of different things because that's what active traders really need to do. Now Rodrigo talked about the FXI trade that we did, and I just want to pull that back up and show you. Show you how that worked out. Now the FXI, because it went completely against what we were talking about in terms of the fundamental outlook. The fundamental outlook looked horrible for the S&P. I'm sorry, for the Chinese. I'm sorry, the FXI is the ETF for the Chinese stock market, okay, for the big cap Chinese stock market. So, 20 years ago, if you wanted to go, buy, something on the Chinese stock market, you had to, call, get a broker in Hong Kong that could do do a Forex trade for you and things like that. Now you have all these different ways to with these ETFs and these inverse ETFs and such, you can really make some big plays in that marketplace. So let me just see here if I can pull it up here. I had it set up, but then we kind of got off on a tangent there. So, oh gosh darn it. Okay. Jeez, I apologize here, but anyway, we just what I have here is a gazillion examples of how we've made a lot of money in these options here lately. But gosh darn it, it's just not there right now. So I apologize. Oh God. There we go. Okay, I'm sorry. Okay, here we go. Okay, my apologies. Now let's pull this thing up for you so you can see it. But again, what we talked about in the back in the, look at this whole thing with the Chinese stock market. It was just getting killed for a year. And all of 1920, I'm sorry, so all of 2021, they kept every month they seemed to come out and nail another group, especially in the technology area, another group, and clamp down on them. And the market's just getting hit and hit and hit in a series of lower highs and lower lows, all the way down, all the way down. And they started off with the retailers, then they went off to some chip names, then they went off to the gaming names, then they went off for the education. It was just one after another after another. But finally, as it got even worse, over in here, as we got early this year, the SEC came out and said they were talking about delisting a lot of the Chinese names. Okay, and I was like saying, why would you buy anything in China? I mean, there's just nothing but bad news out. Well, I changed my mind after it became ridiculous. It became parabolic. Usually parabolic, I think the upside, it was basically crashing, right? And it became ridiculously oversold. See how it's RSI, it's relative strength index. Look how, when it got oversold here, look how much it rallied quite nicely there on a percentage basis. That was, 15% move. When it got oversold here, same thing, very nice bounce. When it got oversold here, see, nice bounce. Okay, this time it got, let's see, when it gets down to 30, that's why that green line is there. That tells you that the thing is over, so go ahead and buy. It's green, go, buy. When it gets up to the red line or above, that means sell, stop, don't buy anymore, sell or make a negative bet. Well, here it got ridiculously oversold. So I came in and said, we got to buy this thing aggressively. We're gonna look at the FXI calls. And even though I didn't like the fundamental situation, the technical situation was so oversold. And I used my experience knowing that China would come in and support their own stock market, because they always do when something like this happens. And sure enough, what happens the next day, it rallied 27%. Okay, imagine if the S&P rallied 27% in one day. So that RSI chart jumped up, and we own the calls. Here we are. We came in with a very specific call. We don't mess around. Very specific calls. The FXI, March 18th. So we gave the stock, the expiration date. Okay, the strike price, and of course whether it's a put or a call. We came in on March 15th, in the last hour of trading, and we bought those options. By 10 o'clock the next day, it was up over 1,000%. I stayed with it. Why? Because I knew that not only was it working off an oversold condition, but I knew the Chinese government would be buying their own stock market. So when it got to about 3,000% on our gain, I said, okay, we can't get too greedy here. But I also knew the Chinese government would still be buying. So I said, let's sell half. We sold half of our position there, held on to it at the end of the day, and sold the other half at about 8,000, just under 8,000%. So accommodate, basically about 6,000%, 6,000% for the total position. And other people held on to it to the next day, and they made as much as 14,000%. 14,000%. Okay, so that's really the types of things that we can do, and we have done in the marketplace. We mentioned we've done earlier in the year. I'm sorry, it was actually last year. What I did in the Viacom, which was a stock. It was one of those meme stock plays. It became absolutely ridiculous. So we bought that stock, and we bought puts on that stock. The stock dropped 60% in one day, and we made 5,000 times. Well, we got 2,500 times our money. We took profits there, and I said sell the balance at 5,000. Again, some people said that they held onto it for a while and actually got as much as over 10,000% on their return. Okay, so but I want to talk about a little bit about how we do. What do we do and why do we do it? Okay, here's the trades we made just last week, and today. Last week we actually, at the beginning of the week, I had a couple of trades that just weren't working. They were small trades. I remember I kept saying, I want to aggressively sit on my hands for a while because we had an unbelievable couple of 2 weeks. And I'll show you some of those trades that we had from those where we made multiple, anywhere from 70% on some, 100%, 600%, 400% on some of these trades. And then, we made a bunch of small trades last week. They weren't working out well. But at the end of the week, I really was getting, I felt that the market was getting well ahead of itself. And whoops, let's go back here. I don't know. So this is the QQQ, okay? This is the daily. Let me get rid of some of the stuff so you can see it better. Okay, this was Thursday, this was Friday, and this is today, okay? And this is the trade we did. We came in here and the market was trading higher and I just didn't believe it. There was no reason for the big rally on Friday. I kept, people came up with, here you heard it on the financial networks, Bloomberg and CNBC, but they weren't, even they admitted they weren't very strong comments and strong reasons. And it kept going up. And I thought, well, geez, this thing might flatten out. It might even sell off at the end of the day because we knew that the employment number was coming out on Friday, the next day. And I said, but it didn't. It flattened out, but it didn't sell off. And then it rallied again in the last 15, 20 minutes of the day. So I said, this is ridiculous. Even if we get a decent employment number, the market is not going to do very well tomorrow. Well, sure. So what we did, we came in and we bought the SQQQ calls. Other people bought the TQQQ puts. Now, when calls, what are you talking about? Well, see, if you buy calls on an inverse ETF, so you're buying calls on something that goes down, that goes up when the market goes down. So I hope that makes sense. It's like when you're making a negative bet on an inverse ETF, you actually buy calls. And so we bought those calls and they bounced very, very nice. See how it went up excuse me. And we held on to them, okay, for a while. And as the market sold off, but as we got into midday, we sold them. And again, we made several hundred, depending on what was, anywhere from 100 to 200% gain on those I'm sorry, take it back. Yeah, I'm sorry. So you see this, the QQQ went down. So the SQQ, which is what we owned, it's a little funny here. So the SQQ, which is the inverse ETF, do 3. So remember, it sold off because the market had rallied in a straight line, sold off. So we bought the calls on the SQQQ and it took off. It bounced the next day. We sold it in here. We didn't get the exact top. We sold it in here, okay, and made a very, very, very nice profit, okay? Then we kind of watched it for a while. It sold off and then came back up, but it didn't matter. It's like, it only went back up to the same level. Again, we bought, let me get back to it. It's like we bought the $46 calls, okay? And it traded above, traded above 48. We sold them some above 48, but most of it was down in here. But again, we more than double, on a percentage basis, this SQQQ moved up, okay? A nice 7%, 8%, but its options went up several 100%, and we made real nice money. And we stayed out of them. At the end of the day, though, the market didn't rally back. It stayed down, and I really was worried what would happen at the end of the day. So what we did is we went back in and bought some more of the SQQQs, the SQQQ calls. They opened lower. See how they opened lower? And people in the chat room were saying, should we sell these or should we just take our losses? And I said, no, the reason the market is up because of some news out of China. How much is that really going to help? The news that they were starting to reopen. Well, we know that that's positive, but we've known for at least a week that they were going to be reopening soon. This was not new news. And so I felt that the market would come back, and sure enough, it did. So those calls by the end of the day were pretty much back to unchanged. And as the market sold off, okay, I'm going to go back to the QQQ in a second, but as the market sold off, we bought more at the end of the day. I didn't back them up in a big way, but this is the reason. And I told you in a second ago that we were going to talk about, hold on a second. We were going to talk about, oops, I meant to do the GIP chart. Hold on. The GIP chart is the intraday chart. And so again, here, what is this? So you see, this is a head and shoulders pattern, right? A very short-term one. It only lasted the afternoon. But see how there's your left shoulder, there's your head, There's your right shoulder. If it had broken below that line, that would have been the neckline. I would have bought it. I would have been very aggressive buying those bearish bets in the SQQQ. Instead, since it bounced back, I only bought a little bit more because the fact that the market couldn't hold its gains is very concerning to me. And it tells me we'll probably get a sell-off tomorrow. Now, we also had other issues going on. You look at the HYG, high yield ETF, that sold off. It was a very good indicator for us last week when it sold off from these highs. And I'll go back. So one of the reasons we were able to make so much money on the upside was because we saw the big rally in the HYG coming, and we made some real nice profits there. But see this here? This is really negative for the stock market. Why? Because even though the high yield bond market is a bond market, it does not trade with treasuries like most bonds do. Most bonds trade because you don't have to worry about whether they're going to default or not. I mean, we could go into a recession, but we know damn sure that Microsoft and Apple are going to be able to pay their coupon payments every year on their bonds. They're not going to default on their bonds. Their stock might go down, but their bonds are going to stay, or at least they're going to pay that coupon every year. You're going to get that yield every single year. You're going to get that coupon payment twice a year. In the high yield area, these are much more risky. They're called high yield. They're called junk bonds because they're lower quality bonds. They have a much higher chance that they'll default. If we go into recession, a lot of those bonds will default. And so they trade more like stocks. So they get hit a lot harder when we have a recession, just like the stock market does. Whereas Microsoft bonds or real high quality, Johnson & Johnson, one of those other really high top quality companies, you don't have to worry about them defaulting, so they don't react as much. They react more to the interest rate environment in the treasury market. So this is what we are really looking at right now, and why I'm really worried about the market. Now, let's just go. I want to go talk about the big thing though right now is that to really harp on is that as I said, we want to be able to profit from what's going on in the marketplace right now. We're up several 100% in the trading account. This year, and all the trades I do, I put every single one of them in the in the chat room. We have a separate page for it. I go in and I tell you, hey, yeah, we have a scrolling chat, and it's just people making comments all day long. But to make sure people see our moves, I try to good okay. We try to make sure that. I put it in a separate page, so you can look back. If you're off, if you're working full time and you can only check the chat room several times a day, and we make a trade, you can go in there and say, oh, okay, I don't have to scroll around looking for Matt's picks. You can see it right in that special page. It tells you where the picks are, and then you can say, hey, you made this pick 2 hours ago. I've been doing, whatever. Going to work. I've been taking my kids to camp, whatever it might be, and is this trade still good? It's like, yeah, I still like it here. Or no, it's really kind of, it's working, or, but it's really moved a lot. I wouldn't chase it here type of thing. But you can react to that. So you get those calls. But every single time, and you get it when I tell you, this is what I'm going to do, and then I do it, right? And when I take the trade off, I tell you when I'm going to trade, and I tell you when I'm going to do it, and then I do it. I do not. I don't pick and choose just the winners to tell you about. I guess some people could go in and say, hey, I'll just, I'll make a few trades, and then the ones that are working, I'll tell them about it, an hour later. No, I don't do that. You know about it when I do it. So when I make money, and if you lose money on a trade I've told you about, I've lost money on a trade I've told about. Okay, I do not make any money by churning an account. You don't make any more money by like some brokers might, especially because you do still pay a commission for a small commission, but you do pay a commission for options trades, which you don't have to do for regular trades, common stocks. But so I'm not doing that. I'm trying to help people make money on a regular basis, in a consistent basis. And we've been able to do that in these options trades. We do them in a straight regular trades. We do stick with the puts and the calls. Once in a while, we'll do a strangle or a straddle. But mostly it's just that. We're not doing, condors and buy rights and things like that. There's nothing wrong with that. And quite a few people in the chat room do engage in that. But my job, I was a trader for 25 years at Solomon Brothers, which was the most important trading desk on on Wall Street for the 70s, 80s, and 90s. I was there for 15 years in the 80s and 90s. And then on the Merrill Lynch trading desk for 10 years, where I was, I I ran the Boston trading office for Solomon Brothers, covering and Morgan Stanley was the senior. I'm sorry, Morgan Stanley, Merrill Lynch, senior trader there, where we were covering the biggest and best accounts on Wall Street, the biggest mutual funds, the biggest hedge funds, biggest banks, insurance companies, et cetera, you name it. So I really learned on what it really means, not just the theoretical stuff that most analysts talk about. I learned what you need to do on the markets every single day to make the real money, not to trade actively. Like I said, so many things happen when you're just following what theoretically should happen down the road instead of saying what is happening and what will happen right now. But just to go over some of these things that we've been able to make on a very consistent basis. Last week, now this was a trade that I did not engage in. So quite a few people in the chat room did, and I didn't. So, like I say, I'm not the only one giving ideas out there. We have a lot of people who give some fabulous ideas. This was the one on Amazon where one of the people in the chat room did some research on what happens when Amazon splits and what happens to the stock, and it tends to rally going into those times, into that split. And sure enough, she came in and bought them here, and as did several people. They bought these things on Monday at the beginning of the week, and they were selling them up here like up 500%. And others held on to the next day. Now, I don't know that anybody sold right at the top. I was not engaged in this call, so I have to put it right there. I was not one of the people in this trade. It was other people in the chat room. But you theoretically could have made as much as 1,500%. Some people sold it down here. It was 800 or 900. But either way, it were huge. I know one person flat out said they made 800%. Just huge trades. So these are the ones. And then as we went later in the week, they made similar trades in here that they worked very, very well. So I'm not the only one that's making these trades. These are people who are coming up with these ideas. Now, one we did come out with was that I came out with on this would have been Wednesday. Talked about advanced micro devices, and I said, this thing looks like it wants to break out to the upside. So I came in and said, again, very specific trade, not a general one. I said advanced micro devices, the strike price June 30th, the expiration date June 30th, strike price $105 in the calls. It came out here. It wasn't working for a while. Believe it or not, I sold my options. Okay, I didn't buy that many of them. Other people held on, and look how much they made, 146%. So that was a trade last week. So those are two trades from last week. I also told you about the SQQ trade where we made well over 100%. That's just last week. Then you go back the week before. This was the Viacom trade I talked about earlier when Viacom got so incredibly overbought. This was a trade I actually did in the tier 3 chat room, not chat room, tier 3 newsletter. I had not started the chat room yet, but that was the one where we made 2,500 on half and 5,000 on the other half. But again, going back here, oops, I went the wrong way. Here is it, the previous week, TQQQ. It's like, so we're making it in both directions. Say, well, I am cautious on the market still, and we can go over why I am and why I think we'll have a lot more problems in the marketplace and a lot more volatility as we move through the year. But here was one here, May 27th. We came in, and we see these are the May 27th calls. It was an intraday trade, okay? The market was just getting oversold. I went out and said TQQQ, okay? Those are the bullish, leveraged ETF on the QQQ. So I said, let's go out and buy the May 27th $30 call option. We bought that in the morning. As it got late in the day, I was like, hey, we have made 100%. We've doubled our money in just over 2 hours. Let's get out. And we got out, not at the exact top, and anybody, did not pretend to get the exact top. And believe me, it looked like it was going to get hit, and people got worried here. I said, no, don't worry, we're going to hold on to that. And we doubled our money. Again, so that was 2 weeks ago. Okay, same thing, 2 weeks ago. And I'm sorry, at the same time, at the same time, we bought some QQQ. Whoops. I'm going to say, yeah. So earlier in the week, let's pull this up again. There we go. Good. Okay. Early in the week, we bought the QQQs. Now, this was a little bit different because I didn't want to go. The QQQ calls, the QQQ options, they expire 3 times a week, Monday, Wednesday, Friday. The leveraged ETFs only expire every Friday. So if you want to make a real short-term call early in the week, you'll have to pay a lot of money for those ones that expire on Friday. I went out and wanted to buy one on Wednesday. So we went out and bought the May 23rd, again, $287 calls, right? We bought them in the morning, and then right when the market was about to close, we were up 174%. I said, you know, I'm not going to get greedy. I think the market could rally further the next day, but why get greedy? 174%, let's out. That's how we did it there. And then, you know, here we are a couple days before that on the SQQQ. Okay, this is a negative bet. Again, the May 27th, again, the exact trade, what the asset is, what the expiration date is, what the strike price is, whether it's a put or a call. Again, we bought them right at the end of the day, made 98%. And then I said, it was almost a double. I said, let's get out. Didn't get the exact top. But, you know, again, these are the types of consistent calls. Here, now they'll go back the week before that. So now we're going back 3 weeks. So I talked about the trades we did this week, the trades we did last week, the week before. Now we're going 3 weeks back. And again, we make them in both directions. And that's one thing, great thing I want to talk about again, is we have the opportunity, we have the tools today that we never had before to take advantage of these moves of this big volatility in the marketplace, because we have Apple Computer, all these major stocks, all these major companies have options that expire every single week. You know, in the old days, if you wanted to buy if you had a negative feeling and you thought it was only, you know, what it's going to be, hey, I think Apple could really rally here in the next week. Well, that's fine, but their next options expiration might have been 3 months down the road, all right? Because they had quarterly options. That's all they had was quarterly options. And in this case now, you can every single week. So you don't have to pay that huge time premium that is involved. So if you're right on that thing, you can get those big moves. Here was one, I saw the market, and I had been bearish on the market and been very, very right, very, very correct, okay? And I'd been bearish on the market for most of the year, but called some nice bounces. And I said, you know, guys, the market is really getting oversold. We're going to go in, we're going to buy two things. First, what we're going to do is going to buy the TQQQ calls. Again, a specific trade. The TQQ, the expiration date, the 13th, the $29 calls. We bought them at 3 o'clock, okay, one afternoon. The next day, we sold them the next day on a 600% return, okay? 600% gain. Didn't get the exact top. We did get pretty much the exact bottom. We got them right here at 3 o'clock. And that was real nice. At the same time on that day, we bought the Apple calls. See, I bought them just after 3 o'clock that day. Okay, again, it was May 12th. But the May 13th, remember it was Friday the 13th, the Apple Computer. So the symbol, again, I'm in the chat room saying the specific trade, Apple Computer, May 13th. That's the expiration date, the strike price, and whether it's a put or a call. We bought the calls and we made over 400% by 11 o'clock the next day. Again, if I'd held on to them longer, we would have made more money. And again, I didn't get the exact bottom, didn't get the exact top. And, you know, if you're the one who's going to really get mad after making 400% and wishing you'd made 500%, you're in the wrong game, because you'll drive yourself nuts. You will just never be able to, because it just can't work that well. Okay. Now here we see how, well, this was a similar trade as the market was going down into that week. Okay. You see, remember we bought them on the 12th and the 13th. Back on the 11th, we bought a bearish bet on the SQQQ and made 116%. Again, we didn't. If I bought it down here earlier in the day, it would have been much better. I didn't. I'd be first one to tell you. We bought them here, sold them the next day, up 116%. So it's I wish I could say we'd do it every single day. Earlier in the week, I'm sorry, and then we go a week before that. We go back to May 4th. Okay, so now we're going back 4 weeks. And obviously, I misspelled it. Should have been May, not Nay. But again, we bought the call options in the QQQ, 70%. Then you go back to May 2nd, or again, QQQ put option. You make them in both directions, 290. Again, I wish I had bought them at 10 o'clock at the exact low of the day. Anybody who says they're getting that all the time is lying to you. Okay, but we did sell them right at the end of the day with a 220% gain there. And again, we go back. Here we are in April with some nice calls, some nice options there. We made 200%. VIX call options, 82%. This one we held for a couple of weeks. Okay, and we actually own some July 35 calls right now for the mix. I'm sorry, for the VIX. And remember, the VIX is a negative bet, so we are betting the VIX will go up because we are betting that the stock market will go down. But again, that gives you, I think, a good idea of the number of calls we've been able to make. I shouldn't say calls. I should say the number of plays we've been able to make, whether it be puts, whether it be calls. We've been able to make them on both sides of the market, and the tools are there because, like I said, we got weekly options, and then with the index options, we have 3 times a week on the QQQ, the S&P, the SPY, and the IWM, which is the Russell 2000 ETF. Those expire 3 times a week. So if you want to make a really short-term call, you can really hit a big home run there too.
And we have a bunch of questions, people that have been emailing here. So I'm just going to get these questions. These are chat room questions from you guys. So it'll just take a minute here or two, Matt.
Sounds good.
Okay. All right. So folks, these are questions from you guys in the chat. So thanks a lot for sending these. And then we'll get back here to the session. So are the sessions on Tuesdays with Matt recorded? Yes, they are. As far as this session, it is not being recorded. Everybody can watch for free, but if you're an Inner Circle member, you do get the recording. Does everybody that joined get a free laptop? Yes. If you see a laptop on the checkout, that means that we still have a laptop available. So good question there, Phil. Let's see. What is the chat room schedule? So the chat room schedule is Monday to Friday, 9 to 5 p.m. And you have the session on Tuesdays, which is from 11:30,
11:30, right? Eastern
yeah.
time.
Yeah, 11:30 ahead, 11:30 and ahead, right? Could be an hour or so, depending how Matt is feeling it in the markets. And so good question there, Joanna. Let's see, is there a money back guarantee? Yes, 7-day money back guarantee. And the price at renewal is the same as it's today, which is 70% off. That is just till midnight, guys. So unless you want to add anything on the format, because I know you're always adding education and things on these Tuesday sessions. Is there anything there I missed on the?
No,
Tuesday session?
that's, yeah, just to say is that, we love the fact of the 7-day guarantee because you get a chance to feel about, am I really making the whole idea for me? I've talked about, if you go out and you want to go, geez, I'm going to go play. I'm an avid golfer. I'm going to go play Pebble Beach. Great. You're going to spend $500 or more to play. And that money's gone. That's okay because it's like you're willing to pay it because it's like, oh my God, it's Pebble Beach. That's great. And it's a great experience and you're willing to do that. Here, what we're trying to do, and we've been very successful at doing, is help people pay for the price of this very, very quickly. And so this is not just where you're spending money and it goes away. You're investing money into education, into good trades, where you not only make up the cost of being a subscriber, but also being making more than that, and that goes. Of course, that's the whole idea. Is it's like, and like I said, I'm not. You can trade. Well, I'm not your financial advisor. You can do all the trades I do. You can do none of the trades I do. You can do trades that other people in the chat do. Everybody has different risk tolerances and things like that. But so far, it's worked out incredibly well this year, especially with a high level of volatility, which I think is going to stay. And the other thing is just that. The educational part of it is a comment again today. We got from one of the people just saying how much they had learned. They literally, yesterday was their first day. I'm sorry, today was their first day, or maybe it was Friday, and they said how they couldn't believe that they learned so much. And we just talked about little things like what's breath mean? You have good breath. We're not talking about how your breath smells. We're talking about whether the advancers versus decliners. The number of stocks that are advancing today versus the number of stocks declining are in line with what's going on in the market. And it's a very good, helpful tool to watch that, because if the market's really going up, but the advanced decline, the breadth is poor, that means the market's probably not going to hold up. But if the breadth is very good, then you say, okay, this market's got juice, it could go higher, or at least it's going to hold up. But today we saw, as the market rolled over a little bit, we saw the breadth deteriorate badly. And I said, this is okay. This is a good time to add to our bearish bets. And it worked out very, very well.
Yeah.
So there's a lot of education involved, is my point. Not just picks.
I have to add, myself, I've been here for about a year and a half or so. I've been following Matt's trades for a while. He's pretty much like called every correction with it, like very close. And the most, sorry, that's my cat. And the most recent crash, whatever you want to call it, he called it right before anybody. I remember, if you've been in the chat room, when this happened, when the Nadella sold it from Microsoft. But
Right.
the other thing is that I have done pretty well in the chat room, and the members know, because I've been there. I was trading a little bit more actively, maybe like 2 weeks ago, a week ago. I kind of stepped back because I have things I got to work here too and stuff. But Those 2 weeks, man, it was about 50 plus K in those 2 weeks that I made. So I mean, I definitely have to, number one, say that this chat room has benefited me as a trader so much. So yeah, that's what I'm gonna say, because the chat members know, but yeah, I guess it's your experience. You're pretty good with the timing. Everybody would want to, get max profits, and I agree with it. If you're right, you don't want to be right 2%, 4%. You want to be right 50, 100%. If you're right, right?
Right.
So
That's what we try to do. It's like when we or last week I had some trades that lost money, but they were small trades. They were like, I'm going to dip my toe in. Like you said, Rodrigo, we had made these huge gains over 2 weeks, 2 or 3 weeks, really. And I said, the market's probably going to take a little bit of a breather here.
yeah,
Trade sideways a little bit. Like, why? And I we'll buy a little bit of this here, a little bit that there. It didn't work. Okay, so we lost, a couple $100 there. That's not a big deal because it's not a really big bet. Some we canceled out, some just expired. I mean, there was one that expired worthless, but it was like I barely spent
it's a
any
small
money on it. I
trade.
didn't
Yeah,
really
it's a
care.
small trade, and you let them
Yeah.
know it's a small trade. I mean, after those 2 weeks, to be honest, even mentally, I was a little bit exhausted. I'm like, that's a lot of activity in the market. Like, I'm gonna chill for a bit here. You can't just do it. Yeah, I mean, yeah.
Because you can't make it happen. The market's going to make, the market happens. You can't make it happen. And if the market doesn't do it, and the market's not going to stay, not going to give you that many opportunities, it's not going to give you a gazillion opportunities every week. Okay, there's going to be some
Yeah.
weeks where it calms down, and you got to have the discipline to kind of step back and say, okay, I'm just going to
Yeah,
let things go.
and that's a problem with new traders, where they're out there. They just want to trade a trade because, look, I get it. That's the brokerage mindset they put into you. I want to bring out a quick chat here from Dana in the YouTube side. Dana C, I don't know if you remember her in the chat room. She
Sure.
says, been here 3 days and made money every day. Thanks, Matt. So, I mean, that's her. Thank you from.
And that's that. I mean, that's what we're trying to do. Again, it won't be every day. I mean, the whole idea is to try to win every day, and we're not looking to bet like if you're betting 350 in the Major League Baseball, you are going to make tens, if not hundreds of millions of dollars because you're an unbelievable batter. You're only batting 350 in the stock market. That's not good. Okay, we're not doing that, but we're not going to bat 1,000 either. Okay, we want to be batting 700, 800, and the thing is. But we also want to be batting like 900 in terms of the money wins versus losses. We want to have the wins, let them ride, be big ones, and the losses be small, be on the small side with smaller amounts of money. And that's what I try to do. Is there's frequently I go in and say, hey, this is what I really like here, but I'm going to buy a little bit here, and then I'll add to it. I'll add a little bit more, and then oh my gosh, we got this breakout. Let's jump in, okay? And that's where you can get the idea of when you can really get much more confident about making those bigger trades. Whereas if you dip, like last week, I was like, I'm going to dip my toe in. I'm not really sure this is going to work. In fact, I'm kind of doubting it will, but I'll put a little bit of money into it. And if it's not working, I'll get out. And I won't. But more importantly, I won't add to it. And that's a good way to look at the trading. Too many people think they got to make their bet right at one spot, 100% of it, and make their sale 100% of it. And as I showed you on a couple of our trades, we said, hey, I just made 1,000%. Okay, if I sell half, I'm guaranteed. I am guaranteed. You don't even have to sell that much. You could sell 10%, and you're guaranteed not to lose money, right? Even if the thing came way back down. So we try to, again, risk management is very, very important, because trying to pick the exact area that's absolutely the right one to get in, the right area to get out, it's impossible. We'll be batting 700, 800, and making and making sure those ones do well, and where the losers don't lose much, and not be caught up in trying to catch the exact move. You can buy it more than once, and you can take profits more than once, and you can take losses more than once too. But usually when you're taking the loss, it's like, this isn't working, I want to get out. But when you're taking profits, it's okay, especially because just think about it. If you double your money, if you're up 100% and you sell half, well, that means you covered. If you spend $100 and it's worth $200, you sell half. Well, now I can't lose money, right? You cannot lose. And then you say, well, I think it can go higher, and I'll just ride it higher. Some people, that's what they do. Every single time something gets up 100%, they sell half. I don't do that, because in the options market, you can really you can get a lot more, especially in today's volatility. But it is good to take some profits, and you don't have to do it all at once. And don't get mad at yourself if it's like, geez, I sold it up 500%, and then I sold the other half up 700%. Oh, I wish I'd sold all of it up 700%. You'll kill yourself. Okay, don't worry. You're up 1 at 500, 1 at 700. You make 600%. home run, high five, all over the place. So we got lost on a tangent there. Sorry, Rodrigo. But the point is it's educational, risk management. There's a lot of other things rather than just saying, hey, buy this here or sell this there.
Yeah, I mean the education. I mean, if you make all that money and you don't even know what the hell just happened, look, you can do that. You can just go in there and just mirror everything that Matt does. But more importantly, guys, we want you to learn because this is stuff that, look, I mean, Matt is always going to give it to you straight. He's always going to be honest about what's happening in the markets if he thinks it's going to go up or down, and that's really pretty valuable nowadays in these markets, especially as retail traders.
Yeah, because so many people, I'm going to talk a little bit about what I think about the market without, I don't want to, get too drawn out on it, but these people who go out there and they're paid to be bullish, that's their job. And they're on the financial news networks and they're just saying, buy, 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 and they're getting creamed this year. And it's, and you can hear them because they, like somebody say, well, I don't see a recession this year. It's like, but that's the way they're around it. They see a recession. They see it's coming. Okay, maybe it's a mild whatever, but they think it's a good. But they say, but they get around it by saying, I don't see a recession this year. Well, guess what? And sometimes they imply, since there's don't have to worry about a recession this year, then you don't have to worry about the stock market. It's like, well, hello, the market reacts 6 months ahead of a recession. So if we're getting a recession in 2023, when's the stock market going to be affected by it? Right now, okay? And it has not been affected by it yet. And I'll go into that in a few minutes. But my point is that I'm going to tell you the way it is. I mean, today was kind of funny. I got a little grief because people were asking me a couple of questions, and I kind of went back and said, no, this is why, and they're like, one guy said, Jesus, sound like I feel like a 10-year-old talking to my father when he, and I didn't mean to be quite that bearish. But the other person came back and said, hey, we want you to tell it like it is. I'm not sugarcoat it. I certainly don't want to be rude to anybody. I don't think I was. We have a lot of fun on this chat room. Believe me, we kid each other all the time. And every day, most days when I get up to go get a sandwich at midday, and I say, the market, for whatever reason, the market seems to go down whenever I go out for a sandwich. They always like, if it's a good day, they have a bullish day, and we all have positive bets. They ask me to, have it delivered. But we joke around, have a lot of fun with each other, and it's a great community. Like I said, that Amazon trade, unbelievable. That was not my idea. Okay, and I didn't get in on it. Okay, it was several people.
No, the people in the chat room. Tiffany has made some insane trades with earnings, and look, now earnings become another thing. But that's really the value, Matt, because now these people have been with us and with you in the chat room for close to a year now. People build relationships. You start, and look, these are real people. These are not fake bot accounts like you see on Reddit or Wall Street Bets, or just pumping stocks, nothing like that. These are all real people that actually want to make money in this market.
Right. Any trade I make is not. I mean, say pump and dump. Some people go in and say, okay, I'm going to load up in the stock, and literally some of these guys are going to have, from what I understand anyway, they go into chat rooms. And it's not just it's a guy. It's from a hedge fund who's got a boatload of money, and he makes he goes in and buys some stock in good little areas. He buys a little bit here, a lot of there over a couple of hours, and then he comes in with a market order and pushes the stock up even more, and then goes into the chat room and says, "Everybody buy this." The thing runs up. So in other words, pump it up, and he sells it to you because he bought it here, pumped it here, and dumped it here. Okay.
Yeah.
And pump and dump. And we don't do that because every single one of my trades. I don't buy it and then tell you an hour later. I buy it, you know it. I add to it, you know it. I sell part of it, you know it. I sell all of it, you know it. There's none of that, none of this. There's no delays. Okay?
Right. And the thing is, like, I mean, if you watch these news places, like the people that are on there, they're like, I'm down 90% on my portfolio and things like that. And look, let's be honest. I mean, how is the chat room? Matt Maley portfolio doing?
We're many 100%. I would say it's it's.
I think we can give them a deal if they would like to join the chat.
Close to 500% we're up this year. Okay, and it's a.
And you never go all in. You never go all in on any trade.
Never.
Just to be
That's
clear.
So important. I'm
Yes.
glad you brought that up, Rodrigo. People, it's like, geez, I lost. I lost a third of my portfolio today, and I was like, what? If I ever lost more than, it was in over 2 day period, and I was like, geez, that I would never put more than 10% of my portfolio at risk over a 2-day period. It just not you because we're in the options, and it's like, oh, I had a really good day in a stock and it was up 4%. Up 4% one stock, that's great. But if you're in the option, you want to be up, tens of, dozens of percent, if not even 100% on the good trades, and especially in this volatility. And we, there's probably going to be a time at some point this summer, the first week of August, maybe things will be quiet. We'll only do one or two or three trades all week.
Hey, really quick, Matt, really quick. Just want to give a shout out to Alan, Jean, Jacquet, and Sailors and Coling. Welcome to the chat room.
Thanks for joining us. It's going to be very interesting. We'll see what happens tomorrow. Although I'll be up at 4 o'clock to get it on my 5 o'clock. But so I'll probably be in the chat early tomorrow. We'll see what happens to the market, but I'm worried that it might be down. Now, and then of course, late in this week is going to be very, very interesting because we have the CPI number, which is the Consumer Price Index, which is an inflation number. And one of the more important, well, probably the most important inflation number. And then early next week, I think it's early next week, I think Monday or Tuesday, we'll have the PPI, which is the Producer Price Index, which is also a very important number. But we'll probably see some fireworks around that late in the week, but I think we could have a lot of fireworks between now and then anyway. So,
and a quick one here, because we just got another one pop in here. Gis Freitas 1000. Welcome. Let's go ahead and give Freitas a nice welcome.
Thanks for joining. Glad to be here.
Matt, it's just
here. I was just saying, you'll and again, we'll really get up and going tomorrow morning. But this is, I think there's, again, these great opportunities are going on. And one thing I just want to talk about here, and just while I think about it, because I don't know if you guys can see this right here. This is Apple Computer, the chart. Now, I am very worried about Apple. And I say very, I don't want to overstate that. It's a great company, but it's still expensive. It's funny because Dan Niles is somebody I respect. Is somebody, whenever he goes on TV, I always say to the chat room, hey, he's on CNBC. You should listen to him because he's just smart. He's been wrong. We've all been wrong. He's been wrong before, but he's been very, very successful and right a lot more often than he's wrong. And he today made some negative comments about Apple. And I wrote it down. Just, he talked about, that they have, they're going to, right now, the way things are going, they're going to actually have negative growth in Macs and iPhone sales by the end of the year. And negative growth, not, and he just talked about the service. They make 70% margins in their service businesses. And just last week, a couple of firms downgraded it because of the slowdown in the growth of their services business and their app stores and such. And so people say, so that's a reason to be cautious. Now, he also talked about the stock is still expensive on a historical basis. And that's one of the reasons why when I talked about about a week ago, I started talking about buying some of these big cap tech names that have really been washed out, buying them very gradually over the rest of the year. I talked about Meta, Google, and Amazon. I did not talk about Apple. And that was part of the reason. But the things that Dan Niles was talking about, number one, and also just the fact that it was not washed out. I mean, these other stocks were down. I mean, Facebook down 50%. Okay, so, or Meta, what do you want to call it now? But my point is, the reason why I highlight this here, right here, can you see this? This is a death cross. The 50-day moving average is crossing below the 200-day moving average. Now, they both have to be falling, but they are both falling. Now, a lot of people after the close were asking me about this. Hey, it looks like a death cross. I'm like, okay. And I'm bearish, but let's be careful here because look over here. This is where the death cross took place. See it right here? In 2018. Well, guess what? That basically happened within a couple of days before the stock bottomed. It didn't fall out of bed then, right? I'm going to go back further. Look at this. As you might guess, there hasn't been too many death crosses in this stock. But look what happened here in 2015. Same thing. We're going back. See how it's 2015? Same thing. The death cross took place right here, right at the low. Stock rallied straight back. So death cross. The important thing to know is whenever you hear anything, death crosses the 50. Stock broke above or below its 200-day moving average. It's different for each stock. Death crosses are usually negative, but they're not. Now, having said that, look what happened over here. Way back in 2012, the death cross was really negative. It did get clobbered for a while. My point is that don't just take everything you hear on TV or read the news and say, oh my gosh, this is the end of the world or it's the greatest thing in the world. You got to look at multiple different things. That's why I try to look at the fundamentals, technicals, and all this stuff. And that's why I'm going to be a little careful about being too negative on Apple, even though I am worried about where the stock's going. So I guess that's my point, is that some people get locked in, like, oh my gosh, I'm really I'm negative on Apple, so everything I say has to be negative. Well, I don't know why people feel the need to say that. I mean, for me, it's important to show both sides of the story so that you can make your own decision, and then I can tell you what I'm doing and why I'm doing it. But if you only hear one side, you're not thinking about the other side, then you're not doing the right risk management, because then you're not going to get the play correct. But anyway, so those are the types of things that we'll be talking about Apple tomorrow. I can guarantee you that, because of this death cross and because of the fact that it's, they had some people down, lowered price targets and stuff last week, and some big names, Citigroup, and I think Morgan Stanley was the other. So this is something we need to be careful about. But just if I could, I'm going to take just a few minutes, and I don't want to bore people, just why I think this volatility is going to stay with us for a while, and why I think that, people keep saying that the recession or whatever has been priced in, and I just don't think that's happened at all. And what the reason for that is that the market right now is being hit with a 1-2 punch. The first punch was nothing to do with the economy. The stock market was always going to go down when the Fed started tightening, okay? Because they pushed the stock market, and even the biggest bull admits, they pushed the stock market up to way too high values. At 22 times earning was much too expensive. And it was that artificial stimulus they got. Now, people won't blame them too much, because they needed to provide the stimulus because the global economy was shut down. So they did the right thing. They just kept it too long. Okay. And so we come in, and so as soon as they start, even if the economy did nothing, the stock market, and I said this back in December, the stock market was going to have to fall 15 to 20%, the S&P. So this is what we've done. And even now, we're still trading at 18 times earnings. That's not cheap, despite what some people on TV try to tell you. That's not cheap. It's not nowhere near as expensive as it used to be, but it's not cheap. It's still on the high side of historical averages. Okay, but what's happening now? Now we're getting hit by the second punch, because we're seeing a slowdown of growth, and therefore the E part of the PE ratio, the price earnings ratio, the earnings part is going to come down. So therefore, the stock market has to fall further to fall in line to get into fairly valued, and that's going to be the second punch. That's what's going to happen now. We heard it with Microsoft last week, where they came out and they lowered their guidance, and I laugh at the people that sit there and say, "Oh, it was only because of the currency issues." And I'm like, why? I mean, all these permabulls. I mean, it's like whenever the currency helps these international companies, these multinational companies, whenever it helps their earnings, they say, "Hey, look at the weak dollar. This is going to help these stocks' earnings, and it's great for the stock market." But now, when the stronger dollar hurts their earnings, they say somehow it doesn't matter anymore. It's ridiculous. That number one. Now again, Microsoft, they didn't lower it by a lot, but I'd also mention that whenever we see a change in the direction of the trend of earnings, they always give it some excuse why we really don't have to worry about it. And then we, a couple of weeks later, we find out that it does. But the GDP forecasts have been cut in half over the last 6 to 8 months, not just by the big Wall Street banks, but also by the World Bank and the IMF, the International Monetary Fund. How can you cut GDP growth in half and somehow expect earnings growth to still be up in a major? I mean, how could you? None of them cut their earnings growth. It doesn't make any sense. Theoretically, it could come out. Well, say, because the energy stocks. Well, their earnings are going to be really good. That'll make up for no. The energy stocks are 5% of the S&P. That they can't. They're not going to make enough money to make up the shortfall in these other names. Earnings estimates are going to have to come down. I think we're headed for a recession. I think it'll probably start before the end of this year. But remember, nobody on Wall Street is going to tell you we're headed for a recession, or most people on Wall Street won't tell you that until we're already in it. Because if you're an economist calling for recessions before it happens, it's not good for your job security. So I'm telling you that now. This is what's happening. It's either way, we're going to get a sharp slowdown. Earnings estimates are going to have to come down, and and when that happens. When that becomes more evident, I think it's going to happen over the next couple of weeks, because earnings season starts in July, and all these companies are saying, "Hey, look what happened last quarter. If those who didn't pre-announce and just surprised everybody, their stocks got crushed this time. Well, let's ease into it so we can kind of get some bad news out there now. And so when they actually come out, we won't get hit as bad. And not only that, we won't take as much criticism, which obviously these CEOs don't want to do because their bonuses depend on this stuff. So so I think that's what's going to happen. But either way, these people, it's just it just doesn't make any sense. There's one guy saying that stocks are a good inflation, good hedge against inflation. I'm like, what planet? It's a really respected guy, somebody I've listened to for many years. I don't know what the heck he's thinking. Yes, it is bullish when it's demand-driven inflation. We are in supply-driven inflation, just like we were in the 1970s. That was when the oil embargo took place. Okay, that's when OPEC, they came in oil embargo, oil prices shot through the roof. Everybody, because you have to pay for oil. You had to pay to fill up your gas tank and heat your house. Well, now it's not just the energy prices, but food prices are through the roof. And 64% of Americans live paycheck to paycheck. If they're going to spend more money on oil, on filling up their gas tank, even if they use it less, they got to still feed their family, right? They've got to pull back on other areas. And we're starting to see that. We're seeing how the retailers have seen this. They've been going down. The retail stocks have been going down have been going down for months. They've seen it. They knew this was going to happen. This is the retail ETF. Okay, see how this went down? I mean, they've been going down since last November. They know the consumer is weakening. Okay, everybody's out there saying the consumer is weakening. Somehow and then they say, well, the consumer is weakening, so therefore the Fed's going to cut. Is going to cut back or pivot sooner. It's like, no, they're fighting inflation. And inflation is not, this time around, is not demand driven. When it's demand driven, it's positive, because if prices go up, doesn't matter, because people it's demand driven. People are making more money. They have better jobs. They can afford for the higher prices. This is a situation where it's going up for other reasons. It's not going up because of demand. I mean, so it's actually creating growth, a slowdown in growth. Okay. Usually, when it's demand driven inflation, it is being caused by the growth. This is creating a slowdown in growth. Okay, in other words, those higher prices don't create the demand. The demand creates the higher prices. In a supply-driven inflation, it's the high prices that create slower demand in a slower economy. I hope that makes sense the way I explained it. This is going to be with us for a while, because we have yes, some of the supply demand issues will dissipate over time, and we will see. We haven't seen, and maybe we will see peak inflation soon. But who cares if food and energy prices stay really high? Who cares if used car prices come down? Doesn't matter. Demand is still going to be lower. It's stagflation. That's what supply-induced inflation does. It causes stagflation. And they say, oh, maybe we might get. We're already there. We're already there. We may not be there in a recession, but we are definitely there in stagflation. And this is what we have. It's why these. I mean, some of these people were alive in the 1970s. I remember it very well. And if they didn't, they read about it. How they can't put the two and two together, I don't know. But again, many of them are paid to be bullish. That's their job. So they close their eyes and spew out the bullish stuff, BS. But that's on the tangent there. But my point is that there's a reasons for all this. So number one, and people want to blame it. Okay, and the reason why it's going to stay high is because of this war in Ukraine. This war in Ukraine has become a war of attrition. Okay, it's going to be long, and therefore these sanctions are going to be on for a long time. They could go ceasefire. That's not going to take away the sanctions. Okay, if that changes, I will. If they start talking about taking away the sanctions and the oil flow comes back from Russia, I will definitely change my tune. But we have that. We have food because of the food situation. Ukraine being the breadbasket of Europe. These are things that are not are going to keep inflation elevated. Who gives a damn if you go from 8% inflation to 5% inflation? 5% inflation is still way more than we've had in 40 years. It's still enough to cause a slowdown and continue to cause a slowdown in growth. And we have a stock market that's still expensive. Again, if the stock market was trading 14 times earnings, which is what we saw in the beginning of 2019, remember when the Fed pivoted? I was like, well, the Fed pivoted. Well, that's great, but the market was 14 times earnings then, not 18 times earnings. Okay, it's not cheap. And because it's the most leveraged market in history, or well, some of that leverage has now been worked off, but the most leveraged market in history, Whenever a highly leveraged market goes through a phase of unwinding, it always passes fairly valued. It goes to undervalued. It happens every time. I mean, so unless the Fed completely changes, and they could, if we see a serious, meltdown in the system, or so the banks suddenly look in trouble or something like that, they will reverse, and I will reverse my tune. But right now, that's not happening because the economy. People say the economy's still solid. They go, that's great, but the economy is still down here, and the stock market's up here. Okay, the economy is great. Okay? So it's not going to fall into the abyss. So the Fed can keep fighting inflation, and they can withstand. They're more than happy to let the stock market go down. Now it's not going to happen all at once. They don't want to crash, because if it happens in a crash, then you got mayhem. All these leveraged positions have to be unraveled all at once, and you got a big problem. So they want it to be, somewhat gradual, but it's still going to be painful. And the whole point is like, God, this guy's a raving bear. I'm not that way. I'm saying this is what is happening. We're going to get a decline where it's going to be, the S&P is going to fall 25% or more, but before it bottoms, and the NASDAQ could fall even as much as 40%, in my opinion. And it's normal. It's healthy. I've seen it happen before. I've done this 40 years. Let's embrace it instead of fighting it, instead of trying to hide from it. Embrace it, profit from it, so that when it ends, you're the one who's got money to put to work when the bottom and the whole thing is, when they call it when there's blood in the streets. And that's how Warren Buffett became a billionaire, where he bought companies or big chunks of companies at times when there was nobody willing to buy it, because he saw that that's how he became a billionaire. Okay. He didn't do it by, these other guys are takeovers and hedge fund. He was just a plain stock picker, and he always waited. And there's a reason why he started this year with by far his biggest cash position ever. And he has spent some of it, but he's still huge cash position. Why? Because he knows the market's still got further to fall before it becomes really cheap and before he becomes something he can buy. And it's, in my opinion, it's going to come. And those people who've lost a lot of money will, when the bottom comes, and they'll be saying, "Get me out. I'm not going to go back on the stock market." In 2009, which was the best time in the world to buy the stock market, not only the people selling, they sold. Mutual fund flows were outflows for the next 2 years, right? Because people, every time it rallies, oh, finally I can get out. Finally I can cut my losses. They're not as bad as they were. So and they were selling at the exact wrong time. Those of us who could profit during this downturn and at least hold even, we're going to be the ones not only that will have the money to buy it, but will have the confidence to buy it. All right. Yeah, and when the market bounces 10%, we won't worry about, no, this is a major league suckers rally. This is the real thing. I'm going to hold on for years. And those are the people who buy. The people who bought in 1932, the people who bought in 1974, the people who bought in 2003 and 2009. And there's just these times where the baby was thrown out with the bathwater, and to be able to, so I guess my point is, we do this active trading. We all have that bucket of the long-term investments that we have, but suddenly some of that trading, you're going to take some of that trading money and say, we've got some look at where Apple's trading. I'm going to put a bunch of more money in that long-term bucket and just let it sit there for 10 years.
Right.
That's kind of our strategy here. Is to profit from it in two-pronged ways, so we can make money now, but also so that we have the confidence to take advantage of it when the thing really gets washed out at the bottom.
Yeah, and the other thing is that for those that don't know, right, even though you are trading options, in the chat room, people are more than welcome to ask you questions like, "Hey, Matt, what is a good stock with good free cash flow that maybe I could hold for 5 years, 10 years, either for my own savings, vacation, kids' tuition, whatever." It's more than just trading options,
Absolutely.
right?
Oh, absolutely. I mean, I see questions like that all the time, and more than happy to. And people who are in the chat who haven't asked those, hope they will. There are. We have another product in the Benzinga thing we have some long-term stock picks that I pick a couple of picks each year and each month. And it's funny because one of the things I spent for 2 years, almost 2 years, where I was pounding the table buying oil stocks long before anybody else. And these stocks are all up, 300, 400% plus paying really good dividends, and they're still inexpensive on a valuation basis. And so, yeah, I'm more than right now. The longer term plays are much more defensive because of my view on the marketplace. But they've all worked out. I mean, many of them have worked out very, very well. And but as time goes on, those long-term picks will become much more aggressive and much more on the growthy side. When people are saying growth is dead, that's when we're going to be in there buying them.
I do remember that. I mean, everybody's talking about commodities and everything, but you were one of the first to be really bullish on that years ago, and that just goes to show that. I mean, look, you really have. Here's what I do like about everything here with the chat room, Matt, is that you do have the trader background in your DNA, but you have the analyst side as well.
Right.
And I don't know if it's normal to have both of those. Those seems like two different types of people, but it seems like you've kind of merged it into one way, right? Is that how it is?
Yeah, that's definitely what I've tried to do. It was funny because when I was doing my trading and I was starting to write up some comments for trading desks, and then suddenly I started getting research votes from portfolio managers of some of these major mutual funds and hedge funds and things that I was talking about earlier. And so, I started thinking, well, this is, I should do, this is something that's works really well. Seem to have a good grasp on it, and definitely a unique view. So that's when I, made the switch to being a full-time trader to being a strategist, and still being involved in trading on a very consistent basis. And so this is, it's worked out, like I said, it's worked out real well. And I think that, again, the key is to know the difference between, there are times, and believe me, there are, you can go a long time where you're sitting there saying, the fundamental story on this, and the stock is going to go up over 3 years. That's great. But I've been able to show opportunities where I've been for the energy area is the perfect example. I was bullish long before anybody else. People were like going, October 2020, I'm pounding the table, and Morgan Stanley and Goldman came in late January of the next year. And by the end of the year, they're patting themselves on the back because they had huge gains. They did have huge gains, but they were half as big as the gains I had because I got in at the key turning point. Wall Street doesn't do that. They don't have the guts. They want to catch the 70% in between. They want to wait to make sure they've got confirmation. As a trader, I like to wait. I don't wait for that. I look for, I look for those key turning points because that's where the big juice is made. And it's worked out really well. But in that energy sector, there have been several times in the last, well, I guess it's been not quite 2 years, but last 18 months where I've said we need to step back. Let's take profits. Don't sell the whole thing because still like it intermediate and long term. Let's step back. Let's buy some puts on some individual names or maybe on the ETFs, and those have been very profitable. So we've been able to trade around those positions while still keeping them. I've been telling people that own Chevron, Occidental, Conoco, Devon Energy, all these names. But we've traded around them so that even though those stocks have made huge gains, we've made more on top of that because we've been able to trade around those positions.
And the thing is that, so this year, but I'd say more than anything, these past 2 months, 3 months have been my most profitable ever as a trader. And really the main difference here, Matt, is that I started shorting more of the markets, not just going long on one side. And in the chat room. So when you're going, the SQQQs, literally, if you see my portfolio, like the big majority of the gains are SQQQs and TQQQs, just going short and long. And most traders, either they don't know they can do this, or like you say, they sit on the sidelines and they just buy and hold and they watch their portfolio go down every single day and not do anything about it. And in your case, you embrace the volatility. You want the volatility because we make money on both ways.
Absolutely. And that's, again, we have the tools. As I said earlier, we didn't have those tools never had them until, well, and it grew over time. We kind of had them 10 years ago, but barely. Even in 2018, a lot of these things weren't very liquid. Now you can trade almost, and again, there are some that don't. And that's why there's sometimes people come in and say, hey, I really like, this stock. I think it's going to break out, or I really hate this stock. I think it's going to break down. What do you think of the options? And I'll say, listen, these options aren't liquid. You might be right, but there'll be nobody around to buy the options when you turn to sell them. It's not, or maybe the bid-ask spread is so wide, it's too much of a crapshoot. I'm sorry to say that's not going to work. And then sometimes I'll say, well, but you should look at these, or here's a stock that's a bigger stock. It does have options. They have liquid options. Maybe it may not move as much as the other one, but because it has options where you can actually trade them. And one time there was one where I saw somebody asked me about one, and I looked at the chart and I was like, oh, this is a great one. We got to look at this. Finally, somebody came in and said, hey, Matt, hold on here. They don't even have options. So I had to step back from that one. So, I mean, I literally was totally looking at the chart. I didn't know the company at all, needless to say, but the chart looked so great. And the stock did go up, but there were no options to buy anyway. But definitely, it's like, just because something looks like it might work beautifully, and if the I always make sure to let people know these are very liquid. You may make 100% on the options. By the time you sell them, though, yeah, they'll be back down to flat. You might even lose money. So, again, risk management is a big part of what we try to do.
Yeah, and that is something important because I mean we are trading highly leveraged things in the chat room, and that's really why I've been able to. And the people in the chat room, you're able to make those kind of gains. That's about knowing how to use the right type of financial product for it. I think. I mean, you've been doing this for 40 years, so people ask me,
and again,
how does Matt know how does he know when to? Because sometimes you get it really close to the bottom or close to the top. And how does he know that? But 40 years, baby. Try it.
There's little tricks that I learned. Sometimes just the gut. But somebody said, "What was that?" And I said, "Is that just the gut?" And I go, "Yeah. I don't know how. I just knew. And it's. But again, most of it just gut. If you're just relying on your gut all the time, you're gonna have problems. So it's
a trained gut. It's a trained gut, I'd say.
But I'm using all these tools constantly before I get calls. But again,
for those that don't know, I mean, Matt provides institutional level research to institutional clients. So you guys in the chat room pretty much get all the brains there. That's pretty much what Matt does.
That's right. Yep. They get the people in institutional. They pay us through a voting system, but again, some of the biggest hedge funds and mutual funds, et cetera, vote for me for my work on as a strategist here at Militavac. So that's what what I'm trying to help people, individual investors who don't who haven't it's like I said, some of the things that these guys have an army of analysts to help them. And so many individual traders don't have any analysts. I mean, they're just trying to figure it out themselves, and that's very, very hard. It's very hard for the professional guy, so it's even harder for the individual. But again, you look at some of the know some of the tricks of the trade, know what people are trying to do. I mean, it's a when sometimes you hear somebody talking really bullish on a stock, famous person, and I say, well, something. That means he wants to sell it. He's trying to talk it up so he can sell it, which is very unethical. But somehow, some people are able to do it, or they'll do the opposite. They'll talk it down so they can cover a short. It's some of the things I've just learned over the years. And I guess my point is there are times where I'm helping people make money, but I'm also helping people avoid losing money in certain trades that may look enticing, may sound enticing, and certainly make sense theoretically or make sense intellectually, but not everything that not everything that, especially in Wall Street, things that seem to make sense in a textbook don't work at all in the real world. Of course, that happens in many businesses, and it's certainly true in the U.S. I mean, I'm sorry, in the stock market, and it's kind of like a war. It's they say you can have the best battle plan in the world, but something's going to get screwed up, and you need people on the ground to tell you, what's going on, so they can adjust. And that's that's one of the things I try to help people do. And when the facts change, I change. There's no question. Staying stubborn is the dumbest thing in the world. Facts change, you need to change with it.
Yeah, and here's the thing: you are looking at the charts like regularly. This is part of what you do. You're looking at the markets, global markets. So everything is already implied here, right? Entries, exits, when to buy, when to sell, just to follow your trades, because they don't have to learn 40 years of experience. All they have to do is follow your trades, and you post exact entries and exits, right?
Right. I mean, a lot of places they just say, "Hey, I like them. I like this, or I like that," and go figure out what you want to do. And we try to be much more specific and tell you exactly what I'm buying and what we're selling. And at the exact time we do them, and try to indicate the size with the small, medium, large, whatever. Because a lot of times I do start off on a small area, just kind of nibbling away, and it's just a good way to get a feel for when you've suddenly got some skin in the game. It gives you a better feel for what's really going on, and it's just a again it's more of an art than a science. And that's kind of why you need the experience, and that's why I enjoy trying to help people gain that experience. And there's a lot of risk involved, and that's why these are options. But again, that's why I try to talk about risk management a lot, and not just jump in with, oh, I hear, geez, such and such is reporting earnings tomorrow. Why don't we buy it? And I'm like, well, what do you know? I mean, you got to have more to it than that. I mean, you go into advanced micro devices, and it says, guess what? The stock looks oversold, and they haven't reported a bad earning in 7 quarters. Okay, now there's one we can make a decision on, not make a guess on. We're making an educated decision on. Okay, and that stock went up, and we made a lot of money. So these are the types of things so trading around earnings can be really, really very profitable, but they can also, if you're on the wrong side, you can lose 100% of your money real fast. So you got to be very careful, and not just, and again, if you lose money, whenever you lose money on a trade, and you will do that, okay, the thing is, you want to say, I had a good reason for that trade, and it just didn't work out. Okay, that happens. It's like a football coach calling a play, and it didn't work. It didn't quite work out the way they thought it would. They set up the right defense against it. Whatever, something changed. But the thing is, you can live with yourself. If you just say, well, I just, some guy in a chat room with 20,000 people on it said it was a good buy, and that's why I bought it, and then you lose money. I mean, then you're kicking yourself for that. It's like, oh, well, who the heck was that guy? What was I living? You want to have a reason for what you're doing, and that's what I try to help people with that, try to provide why I'm doing it, and so that when it doesn't work, you can say, okay, well, we can, you have confidence to be able to come back and make the next trade.
Yeah, this is perfect for new traders, people that are just starting to get into options, because ultimately this is the most simple type of trade. You're buying a call, you're buying a put, and you sell it to close it. Same concept as it is when you buy a stock. We're not doing spreads and butterflies and all that stuff. Keep in mind, you also get education on the Tuesday sessions and throughout the regular day, right? Keep in mind, there's flexibility with that Tuesday meeting. But for the most part, guys, I mean, that's how you're going to make, like, you're not going to make several 100% on spreads and those sort of trades. This is the type of trade you need to make in order to make those type of gains. The next thing you need is good timing. That's what Matt has, that entries, exits, all that stuff.
Yeah, and there's nothing wrong with some of it. Like I said, a lot of people in the chat room do some of those trades. That they split it up. They do it, and as you get more sophisticated, you might want to do that. That's fine. That's I'm not saying people should. They can be very profitable for people who are, especially for people who are trading all the time, and that's what they do. That's how they make their living. It's a little bit harder if you're doing it part-time. But you can do these ones where you're making the somewhat part-time, where you can still be an active trader, where you're buying and you have again, where you're checking in enough to have a good idea when it's working, when it's not working, it's not sophisticated, it's not hard. And again, we try to tell you exactly what like I said before, the exact whether the stock is, the expiration date, the strike price, and whether it's a put or a call. Right there, right there. None of this. Everybody should. You should look at. You might want to look at the Apple calls here. It looks like the stock wants to break out. Well, that's what some people do, and that could be enough. Because especially for sophisticated traders, they can make up their own decision on which one to buy. And there are times when people ask me, they say, "Hey, Matt, you bought those calls or you bought those puts. I was thinking about these ones." And I'll say, well, I don't like those because of this. Or I'll say, hey, those are just as good. I mean, say why I chose mine over theirs. And every once in a while I say, something, you're right. I should have bought the ones you told me to buy. I mean, usually they're very similar, so it doesn't make that much of a difference. But we try to be very specific so people don't have the vague thing where most people say, I'll just, take a look at the Apple calls. They look good here. Again, I'm not saying that's a worthless thing. And there's sometimes I'll say that. I'll say, listen, this isn't a play I'm going to make. But if you want to look at the Microsoft puts going out 2 weeks and in this range. So I'll be a little bit vague on that because I'm not making that trade. But if I do make a trade, you get the exact trade.
That's really important, because when you are new in options, you do want to have clear guidance and all that stuff. So yeah, basically, Matt's chat room, you're going to get clear entries and exits. I know that you guys, if you are new or if you're trying to get into options, I'm telling you, this is probably the best way to do it. Just because not just, you get the trades, entries, everything specific, but you have Matt throughout the whole day, Monday to Friday, to ask any questions, follow up on trades, that sort of stuff. And it's very important to have that to get a good sense, especially for other traders. Like, for example, myself, I only trade for the most part the Qs, which kind of goes with the market. So the macro is important. And Matt is Mr. Macro. I'll tell you that for sure.
That's great. Yeah. So yeah, I mean, and it's just because I think it's very important to look at the big picture and then breaking on a small thing, because what you need to know if you're making a bet that goes against the fundamentals, it's a very short-term bet. And that short-term bet might be 2 weeks. Back in March, when I called for a bounce in the market, I knew it would last. I felt it would last for a week to 10 days. Well, it ended up lasting 2.5 weeks. And I lost a little money at the end because I really thought the market would roll back over. But did not wipe out the gains it had by any stretch of the imagination, and then we were able to get back on it. But I guess my point is, just like it was, even though I was bearish going into the lows in May, when we hit those lows, in fact, I'll go back to this thing. When people were really getting bearish, 2.5 weeks ago, and let's go back to this and see if I can pull it up. Whoops, yeah. Hold on, only take a second here. I'm sorry. Give you an idea of why. Oops. Okay, now here we go. This is why I was saying, see here in the middle, here 2022, I went in, this is 2.5 weeks ago, and everybody was bearish, and we had made a boatload of money on the negative. Let me pull up the chart so you can see it better. Hold on, I want to blow it up there for you. See, I came in with this chart and showed, listen, this is what's going on. Look how oversold it was. The S&P, this is the weekly chart. It was oversold as it was, more oversold than it was in 2015 low and the 2018 low, and just as oversold as 2011, not quite as oversold as 2020, but of course that was the pandemic and the whole world was shutting down. So I said, I don't think it'll get that oversold. But then I said, we got to start lining up these call options, which worked out. And then in the NDX, it was as oversold as it was in 2020, 2018, more oversold in 2016, 2012, or 2011. This is getting ripe for, again, it was the weekly chart. This is getting ripe for a big sell-off. Then we looked at the Bollinger Bands charts, and I came in and said, hey, look at how oversold this thing is. Even though I don't like the market longer term, it's getting ridiculously oversold. Now, what this tells you, what the heck is a Bollinger Bands? This is the 20-day moving average, okay? And these are this is the, two standard deviations above that and 2 standard deviations below it. When it gets two standard deviations above it, it's getting overbought. When it gets 2 standard deviations below it, below the green line, it's getting oversold. Look how far. And I looked down and said, look how far it got here, how oversold it got here, and look how it bounced back. So it was well below 2 standard deviations below its 20-day moving average. Same thing happened right here back in 2020. 2 weeks in a row, 2 weeks in a row, 2 weeks in a row. I said, here's the time to buy. We went in, we bought the TQQ calls and made, like I said, I think we made 600% on that one. We bought the Apple calls and made 400%. Those were the things we went in on those things. And there's the same thing with the NASDAQ, the Bollinger Bands on the NASDAQ. Okay, but I also said, hey, listen, don't be, if you want to look at some other ones. Oh, the other thing was the high yield market. Remember I mentioned earlier how the high yield market is very highly correlated to the stock market? Its weekly RSI chart was, again, only more oversold one other time back in 2020. So this thing is just, and sure enough, it bounced in a big way. In fact, one of the people in the chat room bought them. I didn't suggest it. Somebody, Tammy in the chat room, bought the calls, the HYG calls, and made 2,000%, 2,000% on the calls. Again, there was one called a play that I did not call, even though I talked about it. And let's see here. The retail ETF, everybody's worried about the retail ETF. Now, this is 2 weeks ago. It was testing its 200-week moving average and was oversold. So I said, if the retailers bounce, the rest of the market should bounce. So I had the S&P oversold, the NDX oversold, the high yield market oversold, the XRT, the retail ETF oversold, and the consumer staples ETF oversold. All these things, it was just below its 200-week moving average. I figured that this market was ripe for a bounce. So these are what, again, we try to help people. I try to help people learn as to why I'm making these decisions, even though I think we'll see lower lows at some point this year before the year's over. I really thought the market would bounce, and we nailed it. I mean, we just nailed it. Made some real good money in these. The QQQ, Apple, and some other advanced micro devices, HYG, some other ETFs. I'm sorry, yeah, ETFs and individual stocks in the buy side. So we want to be able to make these in both directions. That's what we were able to do in that situation. And I think, again, because of the issues that I was talking about with inflation going to stay with us for a long time, I think this is something that this volatility is going to be with us for quite a while, and we're going to be able to profit from it. As we have so far for the last 5.5 months. And before that, we were making some nice money. We bought the fourth quarter of last year, NVDA, we're buying both puts and calls, making so individual side. It's been a good run. We haven't even been doing this for a full year, but we were making it when the market was going up the second half of last year. We really have been making it on the way down this year, and I think there's going to be a lot more volatility to take advantage of, not just for this year, but over the last several, for the next year or two.
Right. And look, a lot of students have been there for a little bit of time there. I know you've seen some progress with folks. When it comes to helping retail traders, when the market, let's say 2020, Matt, I guess everything was going up. So I guess everybody was making money at that time. But then 2021 came in, it wiped out a lot of retail traders, unfortunately, that try to wing it, right? And I was one of them. I've tried it. It's not a good strategy, but it can't last forever. And ultimately, just knowing the markets is just so important. You can't just trade by what's trending on Wall Street bets. It's just not something that you can do long term. And I guess this has helped a lot of traders kind of think twice, because the numbers that you're making are way higher than what these people would be doing trading meme stocks. And at the same time, it's a more consistent approach.
Right,
strategy.
exactly. And you can do it in stocks like Apple Computer. I mean, you don't have to have some wild, it's like, well, geez, meme stock, AMC, are they going to go out of business, or are they going to do what? I was like, well, geez, I'll buy it. It goes up a gazillion percent. But I mean, if Apple goes up a gazillion percent, you don't have to worry about them going out of business. Okay. And the point is, you do it in the options market. And again, because they have weekly options, that you can make that kind of returns. Before, you couldn't do that. Again, if you happen to be lucky and say, hey, I think we're going to see a big move in Apple, and their quarterly options only had a week to go for expiration, well, then you can make that time. But as soon as that thing expired, the next option didn't expire for 3 more months. So suddenly you had to go, well, I still think it can go higher, but I got to pay 3 months of time value to make that play. It just became very, very expensive. Now, people still made money at it, so made a lot of money at it. But you really had to use it. Really was the balance where the institutions were the ones who really made the big money in that area, and now we all can. And it's too bad not enough people do it, but they were all just, again, because they saw the meme stocks, they go, oh, geez, I made hundreds of percent in some obscure meme stock, and we're making hundreds of percent trading index options and big cap stock names that we don't have to worry about. We're going to wake up one morning and they've closed their doors.
And here's why this is so important right now, Matt. I mean, you know this better than anyone. Things are getting tight in the economy. Layoffs are coming. It's going to be tough out there for some people. And, folks are trying to find ways to make additional income, additional revenue for themselves, their families, or kids, whoever it is. It's just unfortunate that they got into the whole GameStop thing, because many of them lost a lot of money. But then I guess at the same time, I hope that some of them are listening here, and you can kind of realize that you can make good money in the markets. You don't have to be trading the meme stocks. More importantly, look at it as income, because the people in the chat room, they're very serious, and we're pretty serious about making money in these markets. So it's a Monday to Friday thing, really.
Right. And I'll just to tell you what you're talking about, what's going on here now. I mean, I want to show you something here. Okay, well, Jamie Dimon is probably the most important CEO in the world right now, or it has been for years, and along with a couple of people. He last week came out and said he's worried about. I don't know if you've heard about it. He came out and said, "Batten down the hatches. We have a hurricane coming." Now, he didn't say. He said it could be a mild hurricane, or it could be one like Hurricane Andrew. In other words, a really severe one. And you say, well, is that really, I mean, gosh, could he be right? Could he be wrong? Is he too, one person was saying in Barron's this weekend saying, well, his stock went down a lot, so he's probably mad that his personal wealth has gone down. I'm like, he's not going to worry about where he didn't make 51 million this year. They turned that down, but he didn't have to worry. He'll never gonna have to worry about where his next meal is coming from. Okay. That doesn't matter to him. What I want to show you here is what happened in 2016. Okay. I'm going to do here. Actually, I'm going to do let's do the stock and then we'll do the market. This is what happened when we had a 15% correction. It started in late 2015 and went into 2016. Okay. Now let me put it up here. 2015, and then we'll go 2018. So I'm starting now, starting in 2015, you can see at the bottom, 2015, 2016. Let's get rid of some of these lines on here. So I'm just going to give you a very basic, just a price chart. Okay, so this may not look like much, but it's a 15% decline in JP Morgan. And guess what he did? When the S&P was down 15%, and he came in and said, and it was announced that he put $26 million of his own money. It's not a company buyback. $26 million of his own money into the stock. He bought personally. Okay. See this little thing down here, this low way down here? That's the day he did it. Okay. So here you are, and the stock never looked back for 2 years. Okay. Boom. Now, I don't have to be a math major to know that if he put in $26 million and 2 years later it was up 120, he more than doubles his money, right? This was something. So what did he do? He came in and said, he told the world, I have the confidence after a 15% drop in the stock market and a drop, I have the confidence to put in $26 million of my own money. At the time, he was not a billionaire. $26 million. Again, he wasn't going to, if it went to zero, he wasn't going to starve. But that was a big bet, and that really took. So what? Now we have a same situation today, where JP Morgan's down, and the stock market's down the same 15%. Now I readily admit there's a lot of things different going on, but here we are here. Well, he did it here after a little bit of a bounce. What's he doing with the market down 15%? Right? He's saying batten down. He's not saying I'm buying the stock. I'm not buying $50 million of my own account, of my own money. I'm saying batten down the hatches. Okay. You really going to fight Jamie Dimon? I mean, I'm not saying it's going to happen tomorrow. Well, last time it happened on the exact day, that was the low. And I'm not saying that last week was the high for this bounce, the exact high for this bounce, like it was in 2015 and 2016. But when you get a guy who's making a completely different decision, he's telling you something completely different than he was in 2016, and a guy who gets to see the whole world, the economy, he talks to people, his business is involved in everything. He talks to CEOs of all these different businesses. He sees what's really going on in the world, okay? And he's saying batten down the hatches. And the last time he said, again, if this is the S&P 500, whoops, let's go to 2018. Yeah, look what the S&P 500 did right here. That was the low, February 11th, and it went straight up for 2 years into early 2018. Okay, what a run! What a nice run that he got on the exact day. He came in and said, "I've got confidence in the economy. I've got confidence in my own company. I'm going to buy my stock." And there's nothing more telling than that. He's not buying his own stock now. He's telling you to batten down the hatches. And then we had the head of BlackRock saying the same thing. The head of Sycamore, who came out and is telling all their venture capital firm, telling their companies to cut back and cut to the bone because we're in for a tough time. We have the president of Goldman Sachs warnings. The CEO of Citigroup is saying that she says that it's almost impossible to avoid a recession. I mean, and people say, there was one person again, and Barron's saying, with all these people being negative, that must be a contrary indicator. That means that the market, these are insiders. These people are in the know. You do not bet against, when insiders do something in a big way, it's not a contrarian indicator. It's a coincident indicator. It's something that tells you it's what you should do. You don't do the opposite. You do what they do. It's like insider selling, right? When insiders buy, right? When Jamie Dimon bought, that was a great buying signal. It wasn't a contrarian signal. It was a good signal. Go ahead and do what he's doing. Now he's saying batten down the hatches. He's telling, okay, guess what happened this fall? Talking about insiders, and people have heard me. People have been on this before. Okay, Mr. Nadella, CEO of Microsoft. Okay, and I came out as soon as it happened. The day again, we heard about the next day. He sold half of his Microsoft holdings right here, the week of Thanksgiving, and they sold another chunk, a total of 2/3 in between the two sales, right here when it got back to that level. 2/3, $374 million. And I said, this is incredibly negative for Microsoft. And it had nothing to do, it only had to do with the stock. The company's great, he's great, their prospects are great, but the stock is just too oversold. He's seeing it, I don't know why he sold it. I don't know what was going through his mind. My guess was that he sees what the Fed is doing, and I was screaming at the top of my lungs saying, hey, the Fed's telling you that the markets are going down. He sees that how tough it would be without the Fed's liquidity. He knew that his stock got pushed way higher than it should have. People do not make those kind of sales. Insiders don't make those kind of sales unless they think the stock is going to go down and stay down for a couple of years. It doesn't mean that the stock's going to go down for 2 years, but that it's going to have a tough time getting back to those old highs within the next year and a half, 2 years, or even 3. Okay, it's what they do. And again, you've heard me say this in the past. Those who've heard me speak before, it's what it's like what all the partners did at Goldman Sachs. They took their company public, sold the stock to the public in 1999 because they saw the stock market bubble in the tech bubble, and of course the market crashed the next year. Sam Zell sold his real estate company right at the top in 2006 or whatever it was of the real estate commercial. It was the whole real estate thing. He had big commercial real estate guy, but he also owned apartments and stuff. Anyway, call it right at the top. Glencore, the big commodities firm. They've been a private company for years. They're partners for over 20 years, 25 years. Partners decided to sell to the, actually 30 years, decided to sell to the public with an IPO. And of course, 2 months later, bear market in commodities began, May of 2011. And it would go on and on. When insiders sell, that's it. When insiders do something, you pay attention. It's not a contrarian indicator. When these big insiders come out and say things are going to be rough, it's not a contrarian indicator. It's a positively correlated situation, and you ought to pay attention. It's just my opinion. And these guys are a lot smarter than I am. And when they say that, it's you want to again want to stand up and pay attention. So I think that liquidity that I've been talking about, and when you could get that many people who are that good and been that good for that long are saying the same thing, it's just something I think we ought to all pay attention to.
Yeah, good stuff, man. And that's pretty interesting, right? Because all that kind of dictates a lot of the trading. Maybe we can, well, can you look into the price action of the stock, MULN, what you can determine from just maybe the intraday or the short term?
Again, the thing with this one I really want to do is see it break above that 50-day moving average. Okay. Now there's a one of the things I just wonder. I mean, one of the things again, as an aside, I wonder if this, if this stuff with Tesla. I mean, Elon Musk. I mean, you can't bet against him. He's so smart, but the stock's been done nothing but crap. It's done very poorly ever since this whole Twitter thing came up, except for the one time a week ago when he kept his mouth shut for 5 or 6 days and the stock bounced. Then he's back in there and the stock's getting hit again. So they're getting more competition, and this is one of the companies that's going to give them competition. But so that's just on a fundamental side. On the and then of course they came out with news that they had a new battery that's going to go 600 miles. Okay, so that's a fundamental story. See the yellow line is the 50-day moving average. Now, one of the rules in technical analysis, very simple rule, is that whenever you have support, whenever you break below a support level, it becomes new resistance. and vice versa. Also, whenever you break a new resistance level, it becomes support if and when it rolls back over. Well, look at this. See how it broke above the 50-day moving average, came back and tested it, bounced back, came down, came close, bounced back, came down. Wasn't going to do it. When it finally broke it, it got hit hard. Okay. So now it's starting to inch its way back up, and you see how it's gotten up to its 200-day. It's 50-day moving average.
Yeah, and I do want to give you, a little bit of context. They got added to the Russell 2000, 3000. So I don't know if there's buying into that or when.
Yeah, and I mean, well, not only that, it just tells you Russell doesn't do this on a whim. Okay, this is a $1 stock, that it's a less than $2 stock that they're adding to their index. They're not adding to it because they think it's going to go away in a year and a half. All right, they're adding to it because they think it's one of the ones that's going to survive. Okay, so if it can break above its 50-day moving average, this should that's old support levels, now resistance, that 163 level. If it can break above that, it should run, especially because it will also give it. See how it has right here? It made lower a low, then it made a higher low, lower low, higher low, lower low. I'm sorry, take it back. That was the low. Then a lower high, lower low, lower high, lower low, lower high, lower low, lower high. Oh, wait a minute. We didn't get another lower low. We got a higher low. Now we're right up here and a little bit of a higher high. It's kind of a mini one. Then another higher low. So now instead of making lower highs and lower lows, we're making higher lows and higher highs. If we can get one more higher high, which also involves a break above its 50-day moving average, along with the fundamental issues that we just talked about, this should really gain a lot of upside momentum. And it should happen even if the stock market is going through a tough time. Like I said, the Russell 2000 wouldn't add this, is not in the habit of adding companies they think they're going to go out of business in 6 months or even in 2 years. They think it's going to be one of these survivors. So this is one that looks real good right here to me. Again, to be more confident, I want to see it break above that 165 level. But it's one to keep. Again, I guess what I would say is, if you want to buy it now, you nibble a little bit here, and then you add after it breaks out. Don't be afraid. It's like, well, if I'm going to add later, well, here again, it's a good way to kind of nibble, get your feet wet. And one thing I've said many times: if you buy a stock and you pay let's make it easy to round numbers. You buy a stock and you pay $10, and then you double down at $20. So wait a minute, don't you double down when it goes down? It's like, well, no, you don't want to do that. When you've got a loser, it drops 10%, you get out. Not on an option, you can let it go longer on an option. But you get out and then you look for a re-entry point if you like it, okay? You can average down, don't get me wrong. You buy it here, you never get the exact low. So, okay, buy a little bit more. But once it starts getting hit, it's like, I just got the wrong timing wrong. I'm gonna get out and look for a better entry point. But on the way back up, it's like, oh, if I bought it at 10, too many people, they buy it at 10, it goes to 20. They go, why didn't I buy more at 10? Or at least I should have bought some more at 15. I'll forget it, I missed it. No, wait, where do you think it's going? Well, I think it's going to 100. Well, then buy more now. What do you think all these Will Danoff, one of the best, maybe the best mutual fund mutual fund portfolio manager in the world? You think he's not? He's been buying Apple and these stocks for years. It keeps going up. He keeps buying it. Now, part of that's because he has new money coming in. But the point of the matter is that if you buy something at 10 and you double it at 20, your average price is at 15. You've got a winner. You've got a guaranteed winner. Then you have a stop level. You put your stop at 16. You can't lose money, unless you get some really weird thing happen and it gaps down at 50%, which can't happen. But but you see my point? If you buy something at 20 and it goes to 10 and you double down, your average price is still 15. But now you got a loser, and all you can do is hope that it comes back up. Hope is not an investment strategy. You buy it at 10, you add at 20. I mean, again, these are wide. I'm using wide, but I'm just using it for pictorial. Look at it intellectually. Is that don't be afraid to add to winners. And it's a little bit tougher in the options market because you have a expiration date. But if you have a long-term stop and you like it, go ahead, keep adding to it. Especially, and I'll say one more time, especially when we get this market washed out, whether at the end of this year, sometime next year, whatever it is, then those stock markets start going up. It's like, okay, well, again, I'm going to go back Amazon, which of course they just split, but let's go Amazon GP. Okay. 1998, bang. Okay, and now, so it's right now it's trading $124, okay? Look where it was trading. Look where it was trading, okay? The stock got going up and up, whoops. Zoom. Okay, let's just go. 2004, sorry. Okay, now, what happened here? 2004. There we go. Okay, so in 2001, you bought it here. The stock on a post-split basis, okay, you bought it here. It's trading at 28 cents. 28 cents. Now, of course, it was split. It was higher than that, but 28 cents. When the stock got up to $1, would you buy more? Well, of course, in hindsight, it's like, oh my God, no, I bought it at 24 cents. It went to $1. It got too high. I didn't buy anymore. So what? So now you've got an average price of 75 cents or 60, whatever the average is, 60 cents. It's like, and I got a winner. And then you just ride it all the way up to 124. 124 times your money. That's not 124%. That's 124 times your money. All right. Those are the things you want to think about. This is the kind of stuff we try to use and help people think about. But that's the stuff you do when the stocks become completely washed out. It's not what you do now because most stocks haven't become washed out, even though they're down a lot. Anyway, I kind of rambling on there, but Rodrigo, if we want to do, we should probably wrap some things up. But I would, if there are a few tickers that people want to talk about, I'd be happy to talk about a few before we kind of wind things down. But I do, we're almost 7 o'clock here, so I'm going on for 2 hours. I'm sure you're getting a little tired of my voice, but when just to kind of wrap things, well, let's see, is Rodrigo there?
Yeah,
Okay.
yeah. Let me know when you're ready. There's some tickers.
Yeah, we can do maybe a couple of stock tickers, and I showed while people are throwing some in there into the room that Rodrigo can give to me. While you guys are doing that, we'll look at the stock the chart on Tesla.
Yeah, that's the first one actually. So
okay, perfect. We'll do that, and it's kind of funny because I'm just worried about what this guy is doing with this whole. I mean, I'm starting to worry about this Twitter thing. I know he's again, this is technically not a death cross because you have to, which most people don't realize. Technically, you're supposed to have both the 50-day and the 200-day moving average both declining. The 200-day moving average is rising. But you see how it's rolled over. It's funny, when it broke 700, I said, this thing's going straight to 800 quickly. So I was dead right on that. But I said, geez, if it can break above 800, it's going to be good too. I'm just worried that he's not in over his head. He's just getting himself into a pickle. Now, having said that, look at this, what we've got building up right now. It's at a key level here, just around 700. If it breaks down below 700, I'm going to get concerned. Obviously, if it makes a lower low back here, it's really going to be a problem. But let's blow it up a little bit. I'm going to get rid of the moving averages. Then I'm going to blow it up a little bit so you can see on a very short-term basis. See here? Okay. Now, we talked about head and shoulders patterns. What we have here that it's developing is an inverse head and shoulders pattern. Okay? Right here. So here's the left shoulder. Here's the head. And we're making a right shoulder. If this thing can rally back above 800 now, that's going to be a break of an inverse head and shoulders pattern, which will be very, very bullish. So really, over the next couple of days, the action in this stock is going to be very important. If it breaks below 700 in a material way, that's going to be a big red flag. Take it back. It's going to be a yellow flag, a yellow warning flag. It won't become until it gets all the way back down and breaks below the head, because the shoulder could just be a little bit of a bigger shoulder and rally back. But it's still, that would be disappointing just because it would just show that that this rally here, is losing steam more quickly. But this has nothing to do with the long-term aspects of the company. But we do have to realize that, let's face it, much like the rest of the market, they got a lot of boost out of what happened in the from the Fed's liquidity. Now there's going to be less liquidity. The stock, I think, there's a very good chance it drops below that 600 level or down near that 600 level at some point this year. Again, because they still need to take more froth out of it. That'll be okay. Doesn't mean the company's gone out of business. You know, there's some people who do still think that they're not going to survive. I don't know. That's not what I'm betting on. I'm just betting that this is much like Bitcoin and these other things that did go much higher. Even though I know that several cryptocurrencies will definitely survive and do very, very well. They went too far too fast because of all that excess liquidity, and they'll probably have to come down more before they. I mean, let's face it. Amazon went down 90% when the .com bubble popped, even though their earnings went up every quarter and their revenues went up every quarter during that decline, during that 90% decline. You know, I'm not saying these things are going to go down 90%, but they could and probably will go down a little bit more, and that'll provide an unbelievable opportunity. But I'm a little bit worried here. The thing is, it may get one more big push. If it breaks above 800, you know, at any time in the next week or so, especially as you're going into the end of if we get into the second half of June and it's rallying nicely, end of the quarter, you know, it gets that, you know, momentum going into the end of the quarter. For the end of for endowments, a lot of university endowments, they have a July 1st fiscal year because it goes along with the school year, and so they really want to have, you know, these good hot stocks on their books. It could really move up. So this is the one to watch. We're watching 700 to that. I know it's a wide range, and my feeling right now is I'm getting a little worried. But if I'm wrong and it bounces back in the rest of this week and it breaks above 800, you want to own this stock for short-term trade. It's going to go to 900 very quickly. Another thing? Yeah, go ahead, bud.
Yeah, the next one that we have here is Amazon.
Yeah, Amazon. Now, this one, you know, it's split and it was up strong today. Now, this is one where I think I'm sure I mentioned earlier that we made, and it wasn't me, it was other people in the chat room who made really good money in the calls. Now, having said that, I turned bullish on the stock in here, and I've been telling people on a long-term basis, you should be adding to this stock. I made a nice double bottom, and I said this thing could run, but I did not make the call that Tammy made talking about the stock split. Now, the one thing I worry about, it's up 25% in just 2 weeks. It's not overbought. You can see the RSI is not overbought, but it sure as heck isn't oversold anymore. This is bullish because it made a nice double bottom and a higher high, and it probably wants to go higher. It went higher today because it's a much cheaper stock. Individuals could afford to buy it much easier now. Instead of paying $2,000 for the stock, now they're paying $124 for the stock. And so it's easier. But can you see how it went? I'll give you an intraday chart. It did come back. So even though it's not overbought, I'm thinking that it'll probably, see how it closed well off its highs. This is just what the stock did today. You know, it didn't close on its lows, but you can see that if it breaks below that 124 level, this is what we're going to be watching for. Again, on a short-term basis. Got to 124, held. Got to 124, held. Got just below 124, a little bit of a head fake, held. That's why it's very important. Never assume when it breaks a support level to the downside or a resistance level to the upside by a small amount, don't automatically assume that's a breakout. You need a meaningful breakout, not just a couple of pennies. So anyway, but it did hold. So therefore, that's three strikes now. Will it be 3 strikes you're out? If this thing breaks below 124 tomorrow, you want to be buying puts for a short-term basis. Longer term, I love the company. Very long-term basis, I love the company. You should buy it every month, buy a little bit every month, all year long. There'll be more opportunities on the upside. Maybe even tomorrow. Maybe this 124 level will hold and the thing will rally. But if the overall market comes down a little bit, like I think it might, watch that 124 level. You get down to 123.75 or so. Maybe we'll look at some Amazon. 123 puts that expire this Friday. We'll look at those. But see how that's it's such a clear level that people came in to buy. And if they decide, oh, I'm not buying there anymore, that they usually get, creates a vacuum when the stock gets hit. So we're in the chat room tomorrow. We're going to be definitely talking about Amazon. We've been talking about it every day for a while. We're going to be talking about it a little bit differently now because of it won't be as much the stock split and the options play around that. It's going to be more on a technical basis.
Yeah, definitely. And then we have PayPal.
Oh, infamous PayPal. Is this ever going to come back? PPL. These guys aren't going out of business. But here's another thing where, it's made this small bounce. It looks like a small bounce, but it's a decent, percentage wise, it's okay. But let's take some of these lines out of there. Oops, we'll take that and we'll take that. And now you can see what's going on. See, it's not overbought or oversold. It's right in the middle. But see, 50-day moving average got a little above it, but couldn't quite break it. Got right to it, came down, right to it. 3 times it came down. A 4th time it came down. 5th time it got close, came down. 6th, 7th time, 8th time, a bunch of times right in there. Got right to it, failed. One of these days, I would hope this stock finally breaks that 50-day moving average in a meaningful fashion. That's when you want to buy it. I don't want to buy it yet. I just don't have it's just been dead money for so long. Look at it, okay. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower, nothing but lower highs and lower lows. So until it breaks above the 50-day, if it gets above a higher high, above here, above 121, it's really going to run. But that's 40% from now, and you don't want to wait all the way until then to get it. And we'll also look at the MACD chart, which is a momentum-based chart. And it's with a 9-day, it's kind of like the golden cross on the 9-day, when the 9-day exponential moving average cross above the 12-day, it's a bullish source of PL. And I'm sure this is as a positive cross already. Yeah, see, we had a nice positive cross here. See how here it was a head fake? It didn't work. Okay, but see the last couple of times it did see a positive cross. It did see a very nice rally. And again, that may not look like much because it's been such a bad stock on an intermediate and long-term basis. But look at that. That's a 32% rally. Okay, and so this one, we've already gotten the cross. Let's see, and it's already rallied. Boom. It's already rallied 22, but this could rally more because you look at each time it's seeing a confirmed one. Now this one more sideways. But see these bounces here, same thing. Even during the rally, this thing could last a little bit more. But when we get to the, I'll tell you right now, because I'm bearish on the market, we'll see how the market's acting. It gets to its 50-day moving average. I will probably be looking to buy puts in it because I don't think it's going to break above it. Okay, because it's already had a decent sized rally. However, if it does, I'll be quick to reverse that trade. I'll dump those puts and buy calls because if it finally breaks out, it's going to run in a big way. It's going to catch a lot of momentum money and really run. But that 50-day moving average is the one we want to keep a close eye on. Right now, my bet is that it probably fails to break above it. But I'll want to stay very, 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 very nimble if and when that takes place.
Right. Good stuff there. And just married, last one here from the chat room asking for Facebook. And we'll wrap it up here.
Meta, Facebook. Now, here's one that I like on a long-term basis. What's her name? Sheryl Sandberg leaving. That's not great, but we also knew she was going to leave. We also have known for a long time that she's going to be leaving, was going to be leaving soon, for whatever reason. I mean, whether she's going into politics or whatever. I don't know. The more I read, the more you say she has a mixed record. Yes, there's certainly some issues she can be criticized for, but I can't imagine what that company would be without her. But anyway, I'm sorry. Let's look at the fundamental outlook because we want to look at all aspects of it. Here's the fundamental outlook. Stock is trading at 14 times stated earnings and 16 times forward earnings. Okay, Apple's trading at 24 times earnings. So this stock has already become cheap. Okay, Apple hasn't. All right, so this is one of the names I said people should be buying along with Apple, not with Apple, along with Amazon and Google. You should be buying a little bit of this stock every month. This was the dollar cost averaging. Remember I said if something goes down 10%, you should get out of it. This is one where we can waive that rule. Buy a little bit each month between now and the end of the year, the next 6 months, and you're going to have a nice little nest egg in this name. And same with those other two. And it's going to be a great one for you and a great long-term play because it's already been washed out. All that leverage has already been washed out of these names. Other names it has not been washed out yet. And even though it's come down, there's still a lot of leverage in them. So let's go back to the chart again. I'm sorry. And so on a fundamental basis, that looks good. And also Zuckerberg's a smart guy. He's thrown out the baby with the bathwater. He's saying, let's just get all the bad news out there. And because it's an election year and there's a big target on our backs, on our chests. And if our stocks flatten our back, suddenly they're not going to, these people who are worried about losing their seat in Congress aren't going to be going after us as much as they're not going to see it as a good political tool to go after us. If the stock was an all-time high, they'd be coming after us left and right. So again, I'm not saying they purposely knocked the stock down this much for that reason. They just took advantage of the situation and said, hey, we've got to redo things. Let's just do it. Let's throw the kitchen sink out of it. We're going to change everything. But again, look at this stock. As the rest of the stock market's made lower lows, it made a very mild lower low, but it's balancing. It's building a very, very nice base. So again, I like this stock. Let me just look at it on a, hold on. That's, let's see, we just look at the closing levels, closing prices, see how it's been moving sideways. If it breaks below this April low, that's going to be a problem. But if it can get above this level here, boom, give it a key higher high above 223. And even if it gets above here, that's going to be a decent one. That's only just 202 or 203. That's going to give me more impetus to, you might even get, if it gets above that level, your monthly purchases should pick up a little bit. And then you buy even more here and you break above this thing. Then you're not only buying more stock, but you're buying the options in a big way. And you might even be buying the options here. But this stock is building a nice base. It's already been washed out. And Zuckerberg is setting up his company. He's taking the pain now, much like Amazon did many times in its career, in its 25, 30 years of existence, or 30, 35 years of existence, where they just said, we're going to plow our earnings. I'm sorry, we're not going to make any money. We're going to plow all our profits into research and development. And that, of course, worked for them really well. That's kind of what he's doing this time. He's like, we don't care about the long-term price of stock. I'm already a billionaire a gazillion times over. That'll take care of itself. What I want is to reshape the company and get it back to where it can be a big grower. So it's a nice long-term play for me. They actually have bigger headwinds than Amazon, especially Google. Google's just unbelievable. Great prospects there. But this one should be a good one as well.
Okay, all right. Well, I mean, I'm going to stay here for a couple of minutes, just going to show you guys the live trading room here with Matt. Any quick closing remarks here on your end, Matt, after this amazing session with the folks?
No, just again, I strongly believe it's going to be a tough time. I've been saying it for quite a few months. I just think that, and I think it's going to continue that way for the reasons I talked about. But if we can take advantage of it, we can embrace it. For those who are afraid of it are going to get hurt. And and not only that, they're not going to have the confidence when the bottom comes in. They're still, they're going to be thinking, oh my God, it's going to go a lot lower from here. So this is what we want to not only weather the storm, we want to profit from the storm. It'll give us plenty of money to take advantage of it when the baby does get thrown out with the bathwater. And then, like I said, and you'll hopefully be able to learn a lot more about the markets than I think most people understand who are individual traders, because they're just not in it day to day. And I love teaching, and I love talking about what I think is going on in the markets. And it's I hope you take it. You'll take a look at it. It's again, the money back guarantee, and like I said, I do not make any money. I do not churn accounts. That you trade a lot or you trade a little. That I don't make any more or any less money. It's just I'm here trying to help people, and you get all my trades. And good luck to everybody. I think it's going to be a fascinating time in the next year or even more. And I hope you come along for the ride. I think we're going to be able to continue to have a lot of success at a time when I think a lot of people are really struggling. Thanks a lot, and we'll see you on the chat room. And thanks a lot, Rodrigo. We'll talk to you real soon, buddy.
All right, man. I'll see you there in the chat room. Thanks a lot, Matt. And folks, what you are seeing right now in front of you is the chat room where Matt is pretty much Monday to Friday. Schedule is 9 to 5 p.m. Eastern. He's pretty much trading throughout the whole day. So Rivian, that is 1,800 for the year, correct? Lifetime would be 6,000. That would be till midnight, only till midnight. And that would be pretty much Matt Maley. So keep in mind, he's always trading. He's always adding, taking off. I'm going to show you some of the trades so that you can see the format, right? How it is. So for example, he's saying here last Friday that he's going to sell half of the SQQQ, June 3, 46 calls right here. So you have a full timestamp, 9:38 a.m. This is Eastern time, at least where I'm at. That's how I get it. So you get the specific contract, price, all that stuff. It's very specific. There's no really confusion for that stuff. And right there, you can see the same thing, right? When he's adding a very small position, you know, if it's a big position, he's scaling into it, all that stuff. I mean, the specifics for all that. And let's see. So this channel, Matt's important messages, that's where only Matt can post. On the top inner circle chat, this is where everybody else can post. You see all the members. Right now, there's 51 people online, but typically you'll see here about 110, 20 people, 120 people live during the day. That's pretty much when it's packed. Not everybody's obviously in the chat. Obviously, some people are just reading what's happening, kind of learning as they go as well, because there is education, right? There are people here that are trying to learn. You got Nutrix. I remember. What up, Dan J? Also, you do have sound alerts right here. You see the bells are pretty much grayed out with a slash. So if you click all, you see they turn yellow. So basically, you have a certain pop sound. That's when you are in the chat and somebody's posting, and you can use it on Matt's chat room or the general, the general inner circle chat room where everybody is there posting, folks. So I'm gonna drop the link in the chat if anybody has questions. Feel free to reach out, email. But basically, there is a 7-day money back guarantee where you can pretty much try it out, give it a shot, see if you like it, and you can trade with Matt throughout those 7 days. And if for any reason you don't like it, you get all your money back. If you do want to keep it, we'll send you a laptop. And then at that point, you can pretty much be part of the community for the whole year, right? That's for the whole year, folks. So I think that covers everything. I'll put the contact info if anybody has questions. And everybody have a great day. Stay safe and hope to see you guys in the chat room.